Okay, and we are live. No, Dookie, it wasn't me this time. I was late because Nate wanted to eat, and I didn't want to subject everybody watching to that sight.
I think everyone wants to watch that, actually.
What's that?
I said I think everyone wants to watch that.
Yeah, I mean, my sushi stream was one of the more popular ones. So depending on how this stream goes, we could recreate
I
that.
mean, bolus GLP-1, right? Me stuffing food down my face.
Yeah, let's see how good Hims products actually work. Let me get fat first. But no, this is going to be a really fun stream. I got Manuel here. I got Nate. Elijah decided he's too important for us, so he might be joining at some point. Roy is probably joining at some point, and then maybe we're going to have the Nighthawk Capital guy join at some point, who I've never talked to before, so that's going to be a fun experience. Yeah, I can't wait. The stock sold off a little bit going into the close. I don't want to read too much into that. I hope you guys don't either. It's at 63.30 right now. Market closes in about 7 minutes.
Oh man!
What do we think? What do we think, guys? Are we flying to 100 or are we going to 50?
See, no one wants to hear my response, but I actually think we're going to sell off because I think the street expects him to always be growing crazy, and the fact they're going to see, wait, they're growing slower, they're declining quarter over quarter, like they're going to sell it, even though management already guided for it 3 months ago.
I agree with this comment, and 1,000%. It's either 50 or 75. There is no in between. There is no in between. And yes, Nick, you're absolutely right. The comps are too hard. That's what Nate is saying. There's a lot of stuff that's priced in right now. And, look, if they have a minor beat, maybe they're going to fall off. If they come in at 640, then we're going to 75. That's
640. We're going to 100. If we get 640 million in revenue and continue to grow triple digits, we are going so much further.
So this is the last chance to get on this train before it takes off. 640 is just 10 minutes away.
Oh man!
In 1 hour, everyone will be like posting charts with the quarterly growth of Hims, like falling for the first time and like making it like it's the end of the world or something like that.
Yep. I mean, it would be pretty crazy even if they come in with like 587 and somehow beat quarter. But I don't see that happening.
Well,
to be honest, I agree with you guys, but if they are really pushing for the compounded GLP-1s, they might have like a huge beat, to be honest.
Yeah.
Today, at least.
But then I think Roy and I's concern there is if they do come with a huge beat, then it's even higher risk for lawsuit.
Yeah, exactly.
Like crushing.
I wouldn't be surprised at all.
Yeah, I think Novo's waiting for that. Like,
but then I
pushing into it or not,
Yeah, and I'd like them to say like our core business is growing at X% or Y%.
They definitely have to address that partnership and the lawsuit risk on this call. Actually, that's the question that I asked them because Andrew posted. He's like, hey, if any retail wants to ask us questions. And my first question was like, can you guys please address this Novo partnership and the lawsuit risk and what you guys are doing to combat that? So I hope they talk about that. I know a lot of retail asked a similar vein. I think it's the main question in the market right now.
But I think like it's always the same thing with Andrew. When he gets asked about the litigation risk and Novo and whatever, he's always saying, oh, we're as blue chip as possible, whatever, no problem. And then, I mean, he signed the partnership with Novo, then they broke up, then whatever. So it's kind of unclear whether he's just trying to make things like more calm, let's say, or if he's really telling the truth. That's why I got a bit uncomfortable because last earnings call, it was like, 100% Novo knows what we are doing, and he literally used these words. And then like some weeks later, that's why I think he should give a proper answer, like a more specific answer about how he thinks he's protected and Hims is protected, legally speaking. I'd love some clarity there.
And I would love to hear from Roy because he has called this the most important earnings in the company's history. Did you say, Roy? Or definitely one of the most paramount earnings is this one for exactly that same reason of the lawsuit ambiguity.
Yeah, that's a big thing. This is the first quarter, and by the way, if it's static, you let me know. This is a little different setup. So you guys can hear me okay?
Yeah, you're good.
Yeah.
Okay.
So far, so
Uh,
good.
the issue is the lawsuit. Like that's the biggest bear case. It's actually realistic. There's a lot of crazy bear cases out there, but that one's legitimate. Novo is also at a place where they're kind of desperate as a business. They've made a lot of mistakes. They're kind of like a wounded animal at this point, and so they're a little bit more unpredictable. My concern is so this is the first quarter that they have guided for sequential declines. Not a big deal. They guided for it. They mentioned it. Now, if let's say they don't decline, that they actually crush on revenue, that's actually a concern, depending on how that comes. But if that comes largely in the back of compounding GLP-1 through 503A and they've expanded it greatly, I think that the lawsuit is probably going to land. Very, very likely. Now, if it doesn't go, then that's great as well. But I think that's the biggest question mark is that 503A exception. Of course, we need to get more of a read as far as that oral solution, how that's going. We'll get updates as far as testosterone and that roadmap. Maybe we'll hear from the CTO as well. But this is a very pivotal quarter for HIMSS, where a lot of people I think are probably on deciding like, is this a long-term growth story that I should be in or not? I think it is, but there is risk. Now, if they blow it out of the water, they get sued. That doesn't mean I'm getting out of HIMSS, but I've sized my position according to the risk. So if we get a silly, irrational sell-off just because they missed some silly, unwritten expectations out there, like analyst expectations aren't too bad there. That's a great opportunity. But yeah, the lawsuit thing is the biggest picture, just like Manuel said.
Yeah.
2 more minutes, gentlemen. 2 more minutes. I'm gonna keep refreshing. Be one of those guys that
Probably
just spam.
7.
I
think it's
Get
always
by
at
405.
I think 05. Yeah.
Yeah, that would make sense.
I threw
Yeah.
up a poll and I said, what is the stock price after earnings? 75, 50, 100, or under 50? And let's see how many degens we have in this chat. Knowing it's my stream, it's probably going to be a lot.
Yeah.
Yeah, nobody else is co-streaming it, right? It's just all you.
I don't think anybody else is co-streaming because Elijah wasn't here, and then you're sort of in and out, and then
Yeah, it's just have us.
I get to keep this $1 all to myself.
No, you got to split it 4 ways. So after tax, of course.
This is a US dollar, so that goes.
If it's after tax, we're screwed. He's in Canada. I think it's gonna be gone by the time it gets to pocket.
I want my 10 cents.
Yeah.
So does the government, Roy.
Yeah, the other thing that'll be interesting to take a picture of is the margins. They had some margin compression, not bad. They still have very high margin products. A lot of that is because of the GLP-1, which is a lower margin revenue overall. So I'm curious if that has changed meaningfully. I think that there's a lot of people that are focused on that too. So that'll be one of those things I'm looking for. Do you guys think that we're going to hear from the CTO at all, or is it a little bit early?
I really hope we do. I hope we hear from the CTO and COO. I would like to hear from both of them since they're both. I mean, even the CPO. I don't think that'll happen, but I'd love to hear from the COO and CTO. But I think they guided for a little bit higher gross margins this quarter. I'm pretty sure they said it would tick up a little bit. So last quarter was 73. I think we'll see 74, 75 on the gross margin side. So.
All right, market is officially closed. Tim's closed at $63.43. Let the refreshing begin. Dookie Pie, thank you for throwing singles at us.
Dookie Pie.
Let's take a look. Let me invest.
I'm continuing to refresh.
Investor relations here, and you'll know when it's out when the stock starts spiking either up or down because that's when the algos will have probably got to it. Pump or dump? Yeah, I mean, I think it can definitely pull back after earnings. That's what I said in the last show last week. So we'll see. I hope it goes up. Oh, did we get something? No,
I don't think
Not
it's
yet.
anything yet.
Let me also say I hate when companies that I follow that I earn in my portfolio report at the exact same time.
Yep.
I already had it with SoFi
Yeah.
and PayPal, and then this time it's HIMSS and Palantir. So this usually what happens is the one that I'm actually streaming does terrible, and I apologize for fellow HIMSS shareholders. Palantir probably is going to go to 200 because I'm not
Probably.
there. So
Yeah. That would be it. Yeah, that would be insane. I didn't realize it sold off so much. Sold off like basically 5% intraday. Didn't realize that.
Yeah, the shirt is green for pump. Yeah, all-star group. I appreciate everybody being here over any other earnings, and that includes Roy, and maybe especially Roy and Nate, because they're both big Palantir shareholders. Thank you to 400 of you for being here. And let's see. Earnings
What
are
about me? Thank me, man.
You're not a Palantir shareholder?
Yeah, but I'm here, man.
No, I think you do. Yeah.
Should be appreciated.
What time is it there? Is it like 9 p.m., 8 p.m.?
Yeah, Tanner does have a HIMS position because I forced him to. So
share the stock chart. It's up 0.5% in after hours trading. I can share the stock chart if you want me to.
They don't care about any of the earnings. They just want to see their money go up or down.
Yes. And we are starting to get some volatility.
Yeah.
Still nothing out right now. Oh, are we?
Nope, nothing yet.
Nothing yet, yeah.
I keep control R in.
Pumping. It's up 1%.
Yeah, for HIMS, anything less than 5% is flat. So
yeah, exactly.
Yeah. I think I saw HIMS house post that the average move after earnings was like 8%.
Yeah,
the best being 30 and the worst being like 20.
And I think even that is kind of muted, but like the implied volatility of the last 3 earnings reports has been either up 20 or down 20, honestly.
Do you think they guide for a higher quarter-over-quarter?
Leo, very generous of you.
I would hope so.
Yeah, I mean they will guide for sequential increase if you're talking about that for quarter 3. I can show you what estimates are, although it's off for one of these.
I also love when analysts guide higher than management, because management guided for 540 at the midline, and I think analysts come in at like 550 or 555, and just like, I don't know. I just always find that funny. It's like, oh, they missed their expectations. Well, no, they beat their own. They just beat analysts.
Yeah, analysts at the top end of the range for this one.
Yeah.
Whoa, Axon. Ad Fonte said Axon beat EPS by 45%, which is in our in my competition
Axon
portfolio.
Is pumping. Let's see if Palantir's out.
Pumping is 1.3.
Speaking of pumping, you guys looked at Travis, you looked at Joby recently?
We don't have that kind of talk here. I won't tolerate it. So either you go back to eating or shut the fuck up. All right.
Up 160% this year.
I know, man. I won't hear the end of it from Tanner, honestly.
But yeah, just go back to him and just say, well, remind me, you made a lot of money on this. How much did you make?
Oh, here we go.
Ooh, wow.
The earnings is out, guys.
Oh, looks like
I should have invested in Joby.
It's out, yeah. 544.8 miss.
That's a miss. First miss.
That's
in
the
public
first
company.
miss ever.
Wow.
Adjusted EBITDA was a nice beat.
Refresh the investor relations. I still don't see it.
82.2.
Where are you seeing it, man?
And Palantir's way up. See, I told you guys. I told you.
Affirms reiterates guidance.
Where are you seeing this?
Stock Titan.
Oh.
Guidance is like exactly in line, like the midpoint with analyst estimates.
For Q3?
And affirms the guidance of adjusted EBITDA as well, which is the midpoint, a bit like more, kind of in line with estimates. For Q3, let's see. Free cash flow was negative 70 million.
Jesus.
Why? How is that possible? Third quarter between 570 and 590, which is the midpoint is a bit below analyst expectations.
What was the EPS? Do they have it?
Can
They
you
have
share your
40
screen, Manuel?
Yeah, let me just, because I don't have two screens, so it's a bit hard. But I will send the link here in the chat.
EPS. EPS.
It's $41 million in net income. No, 42.5. Sorry.
Was it 17 cents or 18 cents?
Adjusted EBITDA, the guidance was a miss for the third quarter.
Yeah, just give me a sec. I'll throw it up in just a second.
Yeah, I'm refreshing. Oh, okay. It came out on their the press release came out.
Can you share, Nate?
Yeah, let me share. Let me get a different tab open so I don't have all these tabs open. All right, you guys can see this.
Yes. Just give me a sec.
Just want to make sure.
All right, go for it.
All right, so officially here we have revenue of 544.8 million, up 73% year over year. That's a miss. I think guidance was 550 or 540 for management. So technically they actually beat their midline, but they missed analyst expectations. Net income of 42.5 million. I don't know what EPS it is. I think that's 17 or 18 cents. If
I
I've
think
done the math
19
right.
cents.
19. Okay, which is a beat. I think they got it for 16 cents.
Oh, but I think it's 19 non-GAAP.
Got it. Okay. Subscribers
And
grew to 2.4 million, up 31% year over year. They affirmed their full year guidance. Just at EBITDA 295 to 335. Okay.
no, I think
Gross
it's GAAP.
margin.
I think EPS was a bit. Yeah.
Gross margin was 76%, so we saw that tick up 3%. It was 73% last quarter. Net income, already mentioned that. Adjusted EBITDA was 82.2 million. Yeah, free cash flow was negative 70 million almost. Interesting. 69.4 million negative.
I'm sure they're going to talk about that on the call.
Yeah, I'm sure there'll be a big question. They got it for 570 to 590, so 580 million midpoint next quarter. And adjusted EBITDA to 65 million as the midpoint next quarter. But they still affirmed their full year guidance.
How's the stock doing? No, it's blocked
down
on Yahoo Finance.
Down 10%.
Oh, not that bad, to be honest.
Honestly, for something like this,
yeah, I would expect a bit more.
I would have.
I mean, we've seen him going down 10% on great results. So this is,
yeah.
So this is not like crazy.
Yeah, I want to know what that free cash flow. I'm going to try and find that.
While you're finding it, can I share Palantir's real quick and we'll go back to him? I know this is the him part, but this is crushing. Like Q2 2025 commercial revenue growth 93% year over year. The full revenue growth 48% year over year, which is accelerating. Guiding for $1 billion. First $1 billion quarter, just slightly over. Like ridiculous. Rule of 4 score 94%. So I've not looked at the slide deck. I'm focused now on him. I just saw the stock price and I had to look.
Let's take a look now at the actual shareholder letter. Let's go through this together. And anybody, if you guys find something, you can feel free to interrupt me. Stock is recovering, honestly, down 8%.
Yeah, I'm seeing that too. I'm only up 8% now.
Maybe they announced something on the shareholders letter.
You guys can look while I go ahead and walk through this. Actually, you know what? Let's stick with that view. All right. So key highlights: revenue up 73% year over year. Net income 220% year over year to 43 million. Adjusted EBITDA up 109%. Operating cash flow, it didn't grow because it's negative. Free cash flow is negative, and we'll find out why that's the case here very shortly. Subscribers 2.4 million, up 31% year over year, and the average online revenue per subscriber $74, up 30% year over year from $57.
And actually, that went down from last quarter. I think last quarter was mid 80s, if I remember right, like 83.
Last quarter was, I think, 73.
Was it? Okay. Yeah, I think
it was
either 73 or 83.
Yeah, it was 73, and I was expecting this to be at 75, and they came out at 74.
So pretty, yeah.
Okay, cool. Let's take a look. 2.4 million subscribers. Here we have the split between personalized and non-personalized. So you can see 1.5 and 0.9 in terms of the personalized and non-personalized. That's pretty in line with what we were expecting.
Yeah.
The personalized subscribers are up 89% in Q2. You can see that the growth is kind of plateauing here somewhat. I would attribute that to GLP-1s probably, but I don't know. You guys can make of that what you will. Let's take a look. How we personalize care. I love that they're talking about this. They talked about this in previous calls or the previous press releases as well. So they highlight the intake process here, where they basically ask you a bunch of questions around you, and then they use MedMatch to make a data-driven recommendation. And of course, this is something that we're expecting to improve as they get into the blood testing. They can get your biomarkers and they can personalize even more. And then you have this dedicated team for your ongoing support and personalization. So they say here, over the last 2 years, subscribers benefiting from holistic treatment plans of a personalized solution has more than doubled to over 60%. The recent rollout, the apple flavor, the hair gummies for hers introduced another innovative solution. Let me take a look, see if there's anything interesting. I'm just skimming to see if there's anything interesting here.
I saw something interesting on page 12, I guess. They have about the international.
Oh yeah.
All right, we'll get there. We'll get there. So this is page 6 right now. Within their first 3 months of being prescribed the treatment as part of the personalized weight loss treatment plan, customers interact with the provider an average of 6 times. These interactions reflect customers' engagement with their own treatment plan, from getting support for managing side effects with customized, what the fuck is that word? Titration plans, titration schedules to get timely answers to questions along the way. Roughly 90% of the weight loss subscribers download the app, engaging with it an average of 1.5 times per week over their first 3 months of their plan. That's kind of interesting. Here you can see the average weight loss, so 10.3% of their body weight, while largely avoiding any disruptive side effects that can make the treatment unsustainable. Stock is down 9.5% as of right now. The majority of participants in this group reported that they suffered no side effects at all, which is huge. This was in their recent release that they had, where they talked about the efficacy of their GLP-1 solutions. Only 25% of customers actually churned, discontinuing treatment within the first 6 months. Okay, let's go down. This testimonials. Data insights. They talked about the chief product officer along with the CTO, expanding the technical team. In the coming months, we'll launch new offerings in hormone health, bringing our world-class approach to one of the most overlooked areas in healthcare. As we move into 2026, we plan to introduce standalone lab testing and expand into longevity-focused care. Together, these additions will help transform our platform from a place people turn to when something's wrong to one they turn to proactively monitor their health and prevent issues before they arise.
That's nice.
So this is the flywheel, and talking about precision healthcare. Oh, they're talking about Zava here.
Yep.
With Zava, we expanded into the UK, Germany, France, and Ireland. 160 million adults combined. There's near-term opportunities that will allow us to drive at least $50 million of revenue from Zava through the remainder of the year at a positive adjusted EBITDA margin. That's pretty cool.
Yeah, I remember them saying it'd be accretive by year end, so that's good to hear how a number they put on it.
Mm-hmm.
Yeah, I love that.
Mm-hmm. And
but they don't say how much they paid.
Well, they might address it on the call, or they might not. They talk about the technical team here and Zava. I'm sure we'll read this more in depth. Okay, page 12. What am I looking at here, Manuel?
It's just let's say they plan to go for longevity in Europe and Canada as well.
The addressable
And-
markets.
Yeah, I mean,
It's pretty cool. Okay, guidance. Based on our continued strength and execution, we are reiterating 2025 outlook. So they didn't raise their guidance, it seems.
Yeah.
gross
So-
margin decreased approximately 500 basis points.
The year over
So they
year,
said-
yeah, but quarter over quarter.
Year over year, yeah,
Yeah.
you're right, yeah.
Yeah,
That
it's up slightly quarter over quarter, which is really
Yeah, I
good.
mean,
Actually.
now they're
Yeah, they got it.
year over year.
They
is
got
growing
it
to-
for better margins. That's why I was surprised. But yeah, it's year over year.
guiding for 45% year over year for next quarter, basically, which is cut in half essentially, which we expected, but
Mhm.
I'm sure that the market doesn't like looking at that.
Okay, financials. You can see a dip here quarter over quarter. 545 million, 73% up year over year. Margin profile, this is what Manuel was saying. The gross margin decreased 500 basis points, and 500 basis points is 0.5% for.
No, it's 5%. It went from 82 to 76 or whatever.
Yeah.
It was. 81 to 76.
Okay, 5%. Because I was going to say, like, 500 basis points doesn't sound like a lot, but if it's 5%, then it's a little bit bigger. Net income, 17 cents of EPS,
Okay, that's what I
$43
thought.
million in net income.
The EBITDA was. I don't know what the free cash flow. Why it went negative?
They said that it was working capital investments and increase in capex.
Where did you see this?
Right on after that page.
After this page. Okay. Yeah, net cash used in operating activities was 19 million. Free cash flow in the second quarter was negative 69 million. Year-over-year decline was primarily driven by temporary working capital investments and an increase in capital expenditure as we continue to invest in the level of automation and broader capabilities of our underlying pharmacy infrastructure. The former is expected to normalize through the rest of the year. At the end of the second quarter, we had over $1.1 billion in cash equivalents, and short-term investments, and approximately $1 billion in debt, primarily driven by our May convertible note offering. In July 2024, we announced our share repurchase program. Let's see if they bought shares this quarter. As of the end of the second quarter, we had 65 million remaining on the authorization. We expect this program will give us the blah, blah, blah. Okay, so do we know what they had at the end of the last quarter in terms of the share repurchase authorization? Because I don't know if they bought or not.
I don't, but I'll look into it.
It doesn't sound like they bought, but
Yeah, probably not.
Yeah, massive injection of cash here, which we know about. All right, what do we think? Let me
Overall,
pull this down.
kind of feel like it. I don't know. I feel like they missed a little bit of revenue, but it kind of met expectations. Like I didn't knew they weren't going to be a blowout quarter, and I knew if they did beat, it would be by very little. Which they technically beat their midline guidance, so they just didn't beat analysts.
I mean,
okay.
Go ahead.
Sorry,
Yeah,
I just checked,
4 million.
and they hadn't, like, they didn't buy any shares during the quarter.
Got it.
Gotcha. I like the extra color that they provided on the Zava acquisition, and that it's going to be accretive as early as this year. Near-term opportunities will drive at least $50 million in revenue from Zava.
Yeah, I'm curious to see where that. I know they said just basically for capex and growth, but I would like to hear some more clarity on what they're actually spending their free cash flow on. Like, what are the quote unquote working capital investments?
It's probably related to slide 10.
Page 10?
Page 10, yeah.
Well, like the flywheel effect and AI stuff.
Yeah.
Like
they brought in 3 critical people, I would say, to their C-suite. And so they're talking about basically making their platform even better, flywheel even better too. Yeah, it's an okay quarter. I actually kind of prefer this, to be honest, guys. I know, you guys may disagree with me, and that's fine. Where they miss on revenue, rather than like if they crushed revenue, then it's because of the 503A.
Yeah,
That's a lawsuit. So it will also, when the 10Q filing comes out, we'll have a better look as far as like the breakdown of that. Then they may even comment on it. Analysts might ask on that too. But margins are up. They're making the flywheel better. Subscriptions are up. It's not. We're used to like ridiculous quarters, and we knew that this was going to be a challenging quarter. So yeah, no idea where the share price goes from here. Like it's down a bit. It's fair, probably to take some off. But yeah.
The fact it's only down 89%, I'm actually pretty surprised. I would have assumed it would have been down 15, 20% based on a revenue miss.
Yeah. I mean, I think that's definitely...
Which might happen tomorrow, to be fair. Usually amplifies during the actual market hours. So,
well, I mean, we have to wait and see what the call is going to be like as well.
I think the issue, though, maybe Tevis didn't sell covered calls into earnings, and
I did. I had $105 covered calls. I did it for the.
Oh, you tried.
I did it for the people. I tried, but I also had cash secured puts. So, maybe they canceled each other out. I don't know.
What do you think, Tevis?
Look, I think I agree with you guys. It was kind of like a disappointing result. Obviously, they had tough comparable periods, and we're going to see what they say on the call. I like the expansion onto Zava. I want to be able to model out essentially what Zava is going to do for them from both the financial profile, but also from a product growth perspective. And so I hope they talk about that on the call. Again, I think the biggest thing for me right now that I want to hear more about is the lawsuit risk with regards to Novo and just how they're managing that GLP-1 portion of their business. So I'm sure we're going to get some more color on that. But did I think that they were going to miss revenue? Like, that was nowhere in my expectations because it's the first time that they've actually missed on revenue,
Yeah. Yeah, I will say the same. I didn't think they would crush revenue, but I still thought they would beat analyst expectations by at least a little bit.
Yeah. And it's actually interesting, right? Because analysts were higher than what management was on us on their expectations, right? So, sorry, I haven't been reading the comments because I've just been busy trying to read the actual report. Yeah.
It's a double miss, though, right?
No, they beat EPS.
No, EPS came in at 17 versus 16.
Yeah, 17, not 19. So it was a mistake.
Okay. Yeah, on quarter they had 23 EPS as the expectations. So
no, that was last quarter.
No, that was exactly. It was 15.4 or something, or 16 cents basically.
Yeah, 16 cents was good. Also, I know you read it, Tevis, but they did say in coming months we'll launch new offerings in hormone health, bringing a world-class approach to healthcare. So coming months, so probably by November, probably just by end of year, really, which is interesting. I hope on the call they touch on that a little more. I'm curious to see a little bit better of a roadmap rather than just the ambiguity of it, but I doubt they'll give much more than that, honestly.
I mean, if it's testosterone or menopause, both of which we know are on the roadmap for this year, then that's not going to be really like anything exciting or surprising to folks. But they did, mention the most overlooked areas in healthcare, which to me suggests that it might be something different or additional. That I think might be really interesting if they say, oh, actually, in addition to these two products, we're also releasing this other product line. I don't think so, but it's probably either testosterone or menopause.
Yeah.
Let's take a look. When does the call actually start?
5 p.m. Eastern, so in 35 minutes.
Great. So call is in about 30 minutes.
Yep.
Let's take a look here.
I'm trying to scan through this letter a little more just to see if I can find any gems.
Yeah.
Andrew posted a video about the results.
Is it a positive video?
Like his own personal YouTube video?
On X, probably.
No, it's like on X, like 2 minutes talking
let's-
about the results.
Shall we play this?
Yeah. Let's
Yeah,
play
why
it.
not? We have a long time to wait.
Will we get demonetized? Oh, wait, it's just me streaming, so who cares? Let's play this video. This is the CEO of Hims and Hers company.
A few minutes ago, we shared our Q2 results, and it's never been more clear that we are delivering exactly what millions of people want and need: access to personalized, high-quality care that meets every person where they are. With a world-class provider network, a growing set of tech capabilities, new treatment options, and experienced new leaders joining our bench, we believe we are on a strong trajectory to increase access to precision care for millions of people across the world. Here's what's important to know from today's results. Growth remains strong across the platform. Our model is working and accelerating. Year over year, revenue grew 73%. Adjusted EBITDA more than doubled, and our subscriber base grew 31%. More people than ever are turning to our platform to access treatment, and we're seeing rapid growth in customers using personalized treatment plans. We're delivering consistent growth across specialties and scaling revenue and profitability, all while expanding access to personalized care. Second, we're building a category-defining platform with the team to match it. With investments in new capabilities like lab testing and strategic leadership hires, we're laying the groundwork to unlock deeper insights, stronger infrastructure, and a more unified experience. This is how we're meeting the moment and shaping what comes next in categories like hormonal health and longevity. All of this builds the foundation for a future where a Hims and Hers membership could cover the majority of conditions that impact an individual's everyday health. Third, we're investing with intent and executing with confidence. In the coming quarters, we're investing further in international expansion, planning to enter high-touch specialties like hormonal health, and working to build a scalable, AI-powered platform that delivers access to high-quality, personalized care. Customers believe in our approach. We're looking ahead to new specialties and markets that can increase access to this high-quality care, and we're showing the industry what the future of healthcare is looking like, how it's scalable, data-driven, and personal. Here's to what's to come in the second half of 2025.
Well, that was the CEO of Hims and Hers, who apparently a lot of you guys in the chat think that looks like Manuel. I don't see it, but all right, I'll take your guys' word for it.
I was muted. I was like, what the hell? I don't see it.
I'm
looking in the 10Q about Zava,
Yeah.
and they said it's for a potential total cash consideration of up to approximately 225 million euros or $265.7 million.
It's pretty in line with what we thought. That's good.
That's under 300 million. That's
I'll take it. That's good.
I will take that. Let me see if I can actually.
The upfront cash consideration was 125 million or $147.6 million.
So 100 million in stock, it sounds like.
And then the rest is in earnout conditions.
Yeah, okay.
Like
Yeah,
118.
Let's read this together. All right, here we go. 10Q. In July 2025, the company acquired all the outstanding equity in Zava Global, a digital health platform registered in Germany with operations in the UK, Germany, France, and Ireland for a potential cash consideration of up to approximately 225 million euros or 265 million based on exchange rate on the closing day, subject to certain conditions. Executed in May of 2025 with respect to the transaction. Let's highlight that yellow. Okay, I guess that doesn't want to work. The company entered into the share purchase agreement to expand its footprint in the UK in the launch of and launched the company into European markets. The upfront cash consideration was approximately 125 million euros, or 147.6 million, based on the exchange rate on the closing day. A maximum of 100 million euros, or 118 million, based on the exchange rate in cash considerations, is payable upon reaching certain earnout conditions. Do you guys think this is because the CEO of Zava stayed on?
Yeah, probably. He probably got a lot of stock incentive to.
Like, they don't want him to
Stay.
just, like, tune out, essentially, and so they want to keep going with.
Yeah, they probably also, like, you don't want to cut the head off the snake, right? Like, he knows all the people, he knows all the management there, he knows the employees know him, and so they wanted to keep him, I'm sure.
And even more importantly, he knows the market. That's a very different market than Hims is in. And it's a very different environment too.
Gotcha. And let's see. What do we think about that? I think under 300 million, but so I'm confused. So it's under 300 million in cash, but they also paid in stock as well, right?
Yeah, so up to 300 million total, I think, or up to 265 million total, 150 million in cash, and then the rest is just like stock, essentially. It sounded like, or like performative things.
I think it's all cash, but they get more cash when the performance meets.
Yeah, so let's take a look.
Still, I mean, pretty cheap.
Yeah, so
I think it's not. We can't really say yet if it's cheap or not because we don't really know the.
Well, it's going to make them. If it's going to make them 50 million in 6 months, then it's probably, you can estimate 100 million for a year. Which
but we don't know how much they did like last year. I don't think it's bad. I think it's way better than I was expecting, to be honest.
Yeah,
I don't think it's bad at all. But I'm not sure if it's the right decision to go after Europe right now. I think they could, but I mean, they have now $1 billion in cash, so they can pursue several opportunities at the same time.
And it's not just Europe; it's Canada too.
Yeah, but Canada wasn't with Zava. It was a different.
No, yeah.
I think it makes much more sense to go after Canada because it's way easier to just build everything. I mean, it's an English country, so it's way easier to adapt the platform to Canada, let's say, and a lot less risky, I would say, because of the healthcare system, etc. But still, I think they might do it. But they have such a huge opportunity in the US that this cash could be used for like more marketing to the core business instead of just pushing for the weight loss product. Now the testosterone. But I mean, they have so much cash, so it'll be fine.
Yeah, I'm actually pretty pleased with that. I didn't think it would come under 300. I thought we'd see 300 plus for sure. So.
Yeah, one thing that I really like. So I was looking at expense, and it's interesting because it wasn't quite what I expected, but I actually like the trend. I'm going to throw this up if that's okay. And they do break down the numbers elsewhere, and they do talk about, but it's basically operational leverage that their expenses are shrinking in terms of percent to revenue, which is what you want to see. This was one of the question marks that a lot of people had on Hims a couple years ago, that they were like, okay, you have no actual operational leverage because you keep spending just as fast as your revenue is growing. And a lot of people that were looking at Hims were saying, well, marketing has to keep increasing to the same rate as revenue. So, are you going to even be profitable? Is this business worth investing in? And it was a fair question, but obviously they proved the naysayers wrong. Now, what's really interesting in this quarter is you can look at the pretty big decrease in terms of marketing by percent of revenue. Now, marketing spend is up some, and they do talk about, but basically efficiencies. And that's really interesting to me because there's this shift that's happening on the web. And I know Hims has TV advertising, they have in-person advertising, they have mailers and different things too, but a lot of it is specifically to the web. And a lot of companies are actually saying the opposite, that they are they're having to do more spend just to have the same kind of results for marketing, just because of the shift that's happening on the website. So whatever they're doing, it's working well. The other thing I really like too, especially with the C-suite that they bring on and talking about that flywheel, is seeing the technology and development actually increase. in terms of the spend that they're actually doing, because they want to build a very valuable product and continue to make that back end, that tech stack, even more vertically integrated, even more impressive. So I like the direction of both of those trends.
It's a great call.
And well, and the other thing too is, like, I think that they mention it somewhere in here where they benefited from organic. We benefited from efficiencies related to new product launches and improving organic customer acquisition trends. Basically, that organic customer trends is they've already heard of HIMS, and they discover it themselves, or they just go directly to the website. They didn't have to. The cost of acquisition for that customer is negligible. And as a company that you want to dominate the market share, that's how you do it: is efficient, smart marketing spend. You still do marketing, but organic growth is the golden grail. Like, this is the holy grail. This is really good.
Yeah. Yeah, and I think they mentioned on the past, I think it was Q2 or Q1, they mentioned that they'll see marketing as a percentage of revenue decline year over year by a few percentage every year. So
this is an interesting comment. I think they acquired Zava for some other reasons, not just the UK market. It's a cheaper place for headcount, as in like expanding their teams in Europe, you mean?
No, I mean they have for a long time that HIMS hires people outside of the US because of that. So
Yeah.
I don't think that's the reason.
yeah. It's got to be.
Yeah, and I mean, look, I think you're going to see this, right? Because they had really tough comparable periods, and for the remainder, I mean, I think the analyst estimates for Q3 are like above 600 million, so it's expected to be higher than what they came in at. I think 640, could be an actual real estimate for Q3, so we'll see. But they're coming off of a year where they just completely doubled the business by all accounts. So we'll see what they say on the call. And I think a lot of the market, I mean, it can't really be expecting a lot of those growth rates to continue forever, right? It can't just grow 100% every single year for the next 10 years, or else it'd be like unrealistically large.
Yeah, I'm trying to come through the 10Q to see anything about semaglutide. Because I'm sure they have commentary on that.
Yeah, I did a quick search. I didn't see it, but I might have missed something.
What are you trying to look for, Nate?
Semaglutide commentary in the 10Q.
So there is some on page 29.
Yeah, I'm looking. I'm just right on that direction.
They highlighted the FDA in their risks section. That's what I was reading. The FDA compounding was one of the risks related to the business, which they talked about, the shortage and how that's going to affect everybody.
There last quarter?
Was it there last quarter?
Yeah, that's what I'm asking. Like, if if it was there, like, already. Probably because the FDA has always been a huge risk, like, generally speaking.
Yeah,
they don't only compound GLP-1s. So, I mean, it's different because the other drugs are off patent, but they probably had to have it. Otherwise, it's quite significant if they just added it. I'm trying to see.
Yeah, I'm also trying to see if they put GLP as a percentage of revenue too. I'm curious because they put that last quarter.
That would be pretty.
During the 3 and 6 months ended in June 30th, 2025, our GLP-1 offerings generated approximately 190 million and 420 million, respectively, in online revenue. A significant majority which came from personalized doses in both periods. So 3 month and 6 month.
Significant majority coming from personalized, right?
Our GLP-1 offering. Here you go. We expect revenue from personalized offerings to increasingly drive online. Our new subscriber growth in GLP-1 offering was driven both by ordinary course marketing campaigns as well as specialized marketing campaigns in Q1 2025, as discussed further below. Certain aspects of our GLP-1 compounded offerings were permitted by the FDA based on shortages of branded GLP-1s, which were affected by regulatory decisions in the first quarter of 2025. During the 3 and 6 months ended June 30th, 2025, the remaining online revenue approximately 347 million and 693 million, respectively, which excludes our GLP-1 offerings, increased nearly 20% and 25%, respectively, year over year as a result of new subscriber growth.
So let's then essentially say core is growing.
In the last sentence there, in the next paragraph, the FDA does not limit compounding and drug shortages, and we're going to do what we want.
Right.
We continue to offer access to certain GLP-1s consistent with statutory exemptions from the new drug approval requirements. But yeah.
Yeah.
So the weight loss entirely for the 6 months was 610 million. If I'm getting that right? 190 and 420?
No, 420.
420, yeah.
And they're guiding for 725 for full year.
Mm-hmm.
Interesting.
725, all the weight loss category. So
Yeah, that's what I mean. So
most of it is,
that's 610 million in weight loss category right
so
there.
in the first half of the year, 37% of revenue was coming from GLP-1s. I think it's a bit concerning. Sorry, please don't kill me.
It was 39.9% last quarter, right?
No, because I mean, if they had $420 million in the first 6 months, then they had like 1.130
last
billion
quarter
dollars.
They told us it's 39.9% GLP-1. So if it's 37%,
Yeah, because in the first quarter it was a bit
higher,
lower, I guess, the number, and it's increasing. That's why I said it's concerning. But let me confirm. I had the 10Q from the past quarter, so
it seems like they already 610 million in total weight loss category, and they got it for 725, which means they've done like 75% of their weight loss category in the first 2 quarters.
This is a bit weird because
so for the 3 months that are ended on June 30th, GLP-1 revenue was 190, Nate, and then total online revenue is 536, so that's 35.4%, or 30% for this.
I'm now with the 10Q open from last quarter, and they said last quarter that the GLP-1 offerings generated $230 million in online revenue.
So it's going down.
No, like this is the same period, so it doesn't make sense. They changed the value. You understand? Like how can they say that? In the last 10Q, they said during the 3 months ended in March 31st, our GLP-1 offerings generated approximately $230 million in online revenue, a significant majority of which came from personalized dosage. And now they said that it was only 190. What am I missing here? It's a bit weird, no? Maybe this includes the branded versions, but I mean it was impossible to do like $40 million in revenue from the partnership with Novo because it was just like a few weeks, right?
So sorry, can you repeat or maybe can you throw it up from the last 10Q, Manuel?
I can throw it up, I guess.
And everybody, the call is going to be in 15 minutes. So we're going to be joining the call in 15 minutes to hear management address the earnings.
I'm pulling up both too to see if I can.
Okay, so can you see?
Okay, so this is the 10Q from...
It's here. From the last quarter.
Okay, so our GLP-1 offering generated approximately 230 million in online revenue. Yeah. So what's your point?
The point is, in this quarter, let me cancel this. They said it was 190 in the first quarter.
No. They said in the last 3 months it was 190. In the last 6 months it was 420.
Okay. That's what I was missing. Okay, now it makes sense.
230 plus 190 is 420.
Yeah.
So it's going. So as a percentage of revenue, it's going down.
Yeah, 38.6% was quarter one, and 35.4% is quarter two, and it'll be less than that in quarter three.
Yeah, sorry.
We can actually, yeah.
So cool. Yeah. So core. So I just did the math. Core first quarter was 356 million. This quarter 355 million. So core is flat quarter over quarter, which
and that's expected. That's expected. I don't know how we're the reason you're losing money in year. I think Hims is the reason you're losing money, or maybe you're the reason you're losing
It's
money.
still only down 9.5%, which really is
Yeah,
better than I
honestly,
thought.
like
that's a typical day of any Amazon's going to copy Tim's news.
Dude, they said that
they
the
triple
core
beat-
business.
if they triple beat and they were down 9%, I'd be like, yeah, that's fine, you know. But on this
In
result,
in this 10Q, they said that the core business, excluding GLP-1s, increased nearly 20%. So it was like maybe 18, 19%, something like that. They're probably channeling like a lot of marketing spend to the weight loss. Not only the weight loss, the GLP-1s.
I'm happy to see GLP-1 though as a percentage of revenue going down. So they're not, you know, the core is at least not slowing. It's flat quarter over quarter. So I don't think
the core is slowing.
No, only 1 million. If you do the math, it's only 1 million.
No, but in terms of growth, last quarter the growth was 30% of the core business, and now it's nearly 20%. So
you guys are looking quarter over quarter or what?
No, year over year. Last quarter, the core business grew 30%, and year over year, this quarter, nearly 20%. But I mean, like that can be explained also by the marketing spend being shifted towards GLP-1s, and that's what I was saying. Like, if they just use, instead of, for example, the cash for Zava, but I mean that was quite cheap based on the structure, because I mean, if it's a disaster, they don't have to pay the $100 million like in the earnouts, so it's really not that big of a deal. But if they just put like step forward and start pushing for the other categories with marketing spend, I mean, they're full of cash right now. They could maybe sustain some growth, but this could mean that they're seeing the customer acquisition costs going up, which is something that a lot of bears have been pointing out. So that's, I would love some clarity, but I'm not sure if someone will.
I'm worried that I'm sure every question is just going to be GLP-1 Novo news.
Yeah, exactly. That's
hopefully not. Yeah, I mean, it's clear. Like, I see the marketing efficiencies mentioned a number of times, and organic growth, organic customer acquisition. So it's clear that they're basically addressing that bear case. They actually do a really good job in their earnings, and also the CEO does too, of directly addressing those bearish questions and those bearish cases. And I really appreciate that as a shareholder. Some companies are like, we'll just ignore it completely and pretend it doesn't exist. So
yeah, I do hope we get a little bit better broad questions this time. Last time it was literally just all GLP-1. So 10 minutes until the call.
What was marketing as a percentage of revenue? Because I think that was going down
40%. It was 46% last year, in the same quarter.
So it's been falling as a percentage of revenue.
Yeah.
10 minutes to the call. Anything else that we want to cover real quick before the call? Our poll is $50 is winning out in our poll, and it's at $57. So I think we're going to be okay, unless they say something crazy on the call, but we'll see.
Trying to see if I can find anything else that is interesting.
Yeah, I was hoping that they would mention oral solution, but I didn't see that at all.
They're
breaking out their weight loss.
Yeah, I mean, they do kind of lump everything together, so
yeah,
which is fine. But
so I was just running the numbers, and in Q1, GLP-1 revenue was 39.2%, and in Q2 it was only 34.9%.
Yeah. Makes sense why we slowed down so much in revenue.
I had different numbers, Manuel. I'm not sure why. I had 38.6 and then 35.4.
Maybe you divided by just online revenue, and I did by all revenue, like including the tiny bit of
including
the wholesale. Yeah. Oh, you're right. You're right. No, that's online revenue.
Yeah, you can also just copy the page and throw it into Grok, and it'll give it to you in 2 seconds. Reading? Who does that?
Yeah, what is that?
Thank you, Manuel.
No worries, man.
Where do we see this stock at the end of August, which is like 3.5 weeks away? Higher than it is today, I would say, unless we have a macro pullback. But
It really depends on this guidance. I really want to hear what they have to say on the call. Like, if they bring
Yeah.
up, if they really hype everything. Oh, TRT, oh, Zava, international expansion, all this stuff.
I mean, it will be. Andrew is always very excited and like
Yeah.
tries to use the right words.
in that case, they would have just updated their guidance higher, and they didn't. They just reiterated what they had before.
Yeah, I mean, he said in the video, Andrew, in the that like 2 minutes video, he said the business is accelerating, and it's not. So he always uses the words that could be like nuanced.
Yeah, I think he
like
probably means year over year. Like
but it's
like
not,
some
man.
silly
I mean,
wording.
it's accelerated, but it was 90% last quarter. Then this one 70%. Next one will be 40%. If you do the math, if they reach the high end of guidance, it will decrease to like 30% year over year on Q4. So it's a bit. I mean, at least I wouldn't. I don't really like to see it when a CEO says we're accelerating, and I mean, it's not like the business is facing any troubles. I mean, it's logical that they will decelerate with GLP-1's revenue like starting to slow down. But he's always very, very enthusiastic. I mean, like
Well,
he should this company.
He didn't say the revenue is accelerating, but
I mean,
I
the
think he
business
might be
is accelerating is a bit implicit
not really. I think
because not even subscribers are accelerating. Like,
well, what's accelerating is the actual flywheel in the business. Like they brought in,
I understand.
three massive people with the C-suite. They've expanded internationally. They have Zava. They're expanding into Canada next year, launching testosterone. I think that's probably what he meant. But it would be better to clarify, not just say that. Like our fundamental business is accelerating. Our core,
Yeah.
That's why I was saying that he always chooses the right words. I mean, he's not lying. It's like the GLP-1's case. I mean, you can't. There's no objectivity, so you can like defend yourself with the right words. And I think he's pretty smart in that regard. Because if you say the business is accelerating, you're not really saying any KPI. I mean, so you're not lying. But that's why he's in the earnings calls when he doesn't want to give a
So I'm seeing a little bit of pushback on Manuel. You guys have to know Manuel was the first of us that was actually in HIMSS.
I'm not even looking at the chat so that I don't.
Yeah. Don't like it's not worth your time, but it's worth my time.
It's okay.
But Manuel was in HIMSS much earlier than us. He understands this business probably better than any of us. And he looks at companies, he looks at it from both angles too. I tend to do the same too. I'm like, okay, what's the bear cases? What's the bull cases? What's the way that I see this company as well? So don't knock Manuel. And it's we don't want to have an echo chamber. I think it's really important because it's very easy to just be like, everything is great and awesome, and let the CEO be the cheerleader. That's fine. Tevis can be the cheerleader. Nate can be the cheerleader. I can be the cheerleader. We need one bear. Just kidding. You're not the bear, Manuel. But we do need a dose of reality. We do need to look at areas as investors that are weaker, where perhaps they missed expectations as well. And honestly, yeah, there's quite a few people that wouldn't mind seeing it trade at a much lower price. That's the main, like, as price goes down, there's much less risk. If HIMSS was trading at $10 a share, Manuel would be loading up the wheelbarrow, I think.
Of course, there's a right price for everything.
Even PayPal.
Stock-based comp accelerated too, which I expected with all.
Maybe that's what he meant.
It was a big jump, 35 million versus 2025 previously.
60 million.
60. Okay.
Yeah, 60 million versus 43, so 40%
Nope.
over year.
Jerome says Novo partnership breakdown meant him spend a hell of a ton on marketing for a GLP-1 when that could have gone to other products. I think we'll adjust moving forward.
Oh, I see. Because they made a lot. They spent like at least a few ads on the branded versions. They run like get the branded version with us for $500, something like that. And I remember that as soon as the partnership started, they, at least I think HIMSS House shared like the that screenshot with the Facebook ads, and they were pushing for the branded version.
Yeah, I don't think that hurt him that much though.
The call is in 4 minutes. 4 minutes. Manuel, what do you see as the future of hymns? Tell us.
I'm not really
Now,
into
no.
astrology, but I mean, I think the business is doing well and will likely continue to do well. They have a lot of verticals to push forward, but I think it's really uncertain how big the lawsuit risk could be. Because I mean, we can all talk about the lawsuit risk, and then they get a lawsuit and they pay like $100 million, and that wouldn't be any problem for him. If that's the settlement, that would be great, and the business can continue its own path, let's say. But I mean, we don't really know, and it could be big, especially because they're pissing off Novo. And I mean, just think about, they were going to release Tears Appetite, and they didn't, because Eli Lilly started right from the beginning pointing to them and saying, "Don't test us." And then they saw that Novo Nordisk wasn't really paying too much attention. And I mean, you can look at their business and see that Eli Lilly takes everything much more serious than Novo. And that's why I think they were smart in going exclusively for semaglutide instead of tirzepatide, because tirzepatide is actually more effective by like all standards than semaglutide. So it would make sense for HIMSS to choose the best option, but they didn't, and I think it was for a reason. So I believe in HIMSS long term. I'm not a bear. I'm not like, I don't want HIMSS to crash. I like hundreds of people got in because of like my initial research. I've been following HIMSS for like 5 years now, almost 5 years. And I like the company, and I don't mind them, and I'm cheering for them. But I have to be first realistic. I'm not going to tell you that HIMSS is going to 100x in 5 years or 10 years. I'm sorry if you want that. I mean, just start a group on Reddit and try to do a massive short squeeze. A lot of people will
clip that part of the sentence that he said, "I'm not going to tell you that," and then HIMSS is going to 100x in whatever years he said. That it's right there. Manuel said it. Pulled out of context.
I should have invited that other guy to the stream. Who was he, Nate? I forget his name.
Nighthawk.
No, not the guy who was like, his last name was with a D something.
With a D?
I don't know who you're talking about.
The guy who had that crazy hymns that he was just
Christian Darden.
Yeah.
Oh man, I don't know if you noticed. That's AI, man. That account is AI.
Is it actually?
Just look at the YouTube videos.
Well,
and okay, like he could just be a shy guy, dude.
No. Seriously, maybe he uses like AI with his own a picture of his face, but it's the YouTube videos are clearly AI, and you see like 20 comments saying it's AI generated. It's AI generated. I mean, I'm not saying that the words aren't like from his thesis and all that, but it's clearly so. It's so weird, man. Just look at a YouTube video. I mean, because he had a few that were bumping like with some good views.
Antonio Linares is probably who you guys are talking about. I have him
too.
blocked.
Yeah.
Darton has been around at least since 2021. He was a Palantir guy. Both of these guys were early Palantir too, but I don't really follow either. So
the confidence for these guys to say half the shit they do, they must be Palantir guys, honestly.
Yeah.
I treated them well.
Yeah. We still have music in the background. I will throw up the call momentarily. And should I hit people with an ad right before the call?
Yeah.
Nah.
Do it.
Nah.
Do it.
It's all right. It's all right. Actually, we still have music, so
HIMSS down 12.5% now.
Do it. Buy the dip.
Yeah, I HIMSS is now 12.5%. Scumbag.
Well, the ad plus the $2 from Dookie Pie, you're gonna buy that dip pretty hard tomorrow.
Heck yeah.
Can't get over this Dookie Pie.
What's your cash secured puts strike at?
40.
Okay, wow. Is it for this week or
September 19th?
Okay, I was like, you probably got nothing for that, but yeah.
Bro, I wrote it like when I was in Mexico with Matt. I wrote 40, 45, 55, but I closed 45.
Yeah.
Oh, here we go.
Operator today.
Can you guys hear this?
At this time,
Yeah.
welcome everyone to the Hims and Hers second quarter 2025 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press star, then the number 1 on your telephone keypad. I would now like to turn the call over to Bill Newby, Head of Investor Relations. Bill, please go ahead.
Good afternoon, everyone, and welcome to the Hims and Hers Health second quarter 2025 earnings call. Today, after the market closed, we released this quarter's shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and Chief Executive Officer, Yemi Okupe, our Chief Financial Officer, and our new Chief Technology Officer, Mo El-Shinawi. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors, and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. Please see our most recently filed 10-K and 10-Q reports for a discussion of risk factors as they relate to forward-looking statements. In today's presentation, we also have certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I will turn the call over to Andrew.
Thanks, Bill. The momentum we saw through the first half of 2025 is proof that our platform is delivering exactly what millions of people have been waiting for: access to personalized, high-quality care that meets people where they are. From the beginning, we have believed that medicine should be centered on the individual, not the system. We're now seeing the market demanding just that. What we have built is working, and it's working at scale. We're seeing it in the momentum of our business, in the results our customers are experiencing, and in the growing number of people choosing our platform to optimize their health and realize the benefits of precision medicine. For decades, only the wealthiest have enjoyed access to these benefits. We are now making them accessible to everyone. At the end of the second quarter, we were serving over 2.4 million subscribers on our platform, with nearly 1.5 million collaborating with a provider to receive a personalized treatment. And that number continues to grow each day. We believe we're not just expanding access to care, we're fundamentally improving how it can be delivered. Today, our platform allows subscribers to access a network of nearly 1,500 world-class providers that can diagnose and treat concerns in a fraction of the time it can take in a traditional brick-and-mortar setting. It equips these providers with hundreds of options to address the unique needs of each individual patient, with these options informed by millions of past clinical interactions and customer journeys. And it enables consistent and proactive support to be delivered seamlessly through the Hims and Hers apps. We believe this innovative and connected approach is leading to transformative results, while also expanding the number of specialties we're positioned to address. I'd like to first touch on the customer successes we are witnessing today, before diving deeper into where we're going next. We recently published a white paper containing an analysis of internal data highlighting what we're seeing in our weight loss specialty when care is personalized, holistic, and readily available. The data reflected that customers on a personalized treatment plan, inclusive of a GLP-1 treatment for 6 months, reported losing on average 10.3% of their body weight. And even more impressive is the number of individuals sticking with their plans. At 6 months, only 25% of customers on our platform had discontinued treatment. This is particularly encouraging when considering discontinuation rates in certain publicly available studies reached approximately 80% by 6 months. Our belief is that this strong retention is the result of three key factors. The first is provider access. It is not surprising that consumers are looking for deep engagement with a medical professional when starting and undergoing a new treatment. Our typical weight loss subscriber has 6 interactions with a provider in the first 3 months of beginning their treatment. The second is white glove customization. Providers are collaborating with subscribers to manage efficacy and side effects by assessing how subscribers are responding to treatments and then adjusting titration schedules and end dosages if clinically appropriate. The final element is the accessibility and clarity brought by app-based tools. Subscribers have the ability to receive clear treatment instructions and educational content, while also accessing tools such as water intake trackers and calorie counters that help them live healthier lives. This approach and the resulting benefits were historically reserved for a privileged subset of the population. Today, we're broadening access to this model despite pushback from traditional incumbents who we believe seek to limit providers' ability to prescribe personalized treatments. Our belief is that these 2 key principles that have played a significant part in the success of our platform will become the industry standard in the years to come. First, the top priority is and will always be the protection of the consumer's interest. Our platform exists to serve the customer, and we ensure that the providers and the offerings and services that we make available are oriented toward delivering the best quality of care for our subscribers. Second, providers have complete independence in decision-making. We empower providers to exercise their own independent clinical judgment in making clinical decisions during each interaction. We've implemented multiple safeguards to ensure providers never feel that they have been coerced or forced in any way to make clinical decisions for business purposes. Over time, we expect more companies will recognize this as the future of healthcare, and the ones who prioritize the customer above all else will be the ones who succeed. We look forward to partnering with those who share that vision. Now, moving to where we're going next. As we build upon this vision and embark on our next chapter of growth, we look forward to bringing the same focus into new specialties. We believe these new specialties will expand our ability to address each individual customer and position us to achieve the 2030 targets we set out last quarter of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. Our upcoming launch in hormonal health marks a significant step forward along this path. For men, low testosterone often causes fatigue, decreased libido, and an overall diminished quality of life, while women face menopause challenges like hot flashes, sleep disturbances, and mood swings. Evidence also shows that treatment in these areas can help reduce the risks of heart disease and cognitive decline over the long term. Our approach will provide access to personalized solutions for both men and women to effectively manage these hormonal changes. We're excited to expand our offerings over time to help combat these conditions that are estimated to impact more than 50 million in the US alone and have been under-recognized in traditional healthcare for decades. A key component to addressing the under-treatment of these conditions will be the integration of comprehensive and accessible lab testing. With our recent acquisition of a blood testing lab, we're in the process of verticalizing testing capabilities that will transform how we deliver access to care. Initially, we expect this will support our hormone launch offering, but in the coming quarters, we plan to begin offering lab testing as a standalone service. We expect this will result in a significant category on its own. We live in a country where normal biomarker ranges completely distort the perception of what optimal health looks like, and access to lab testing can be overwhelming, expensive, and intimidating. By offering access to simple, standardized tests tailored to the individual's need, we expect to empower customers to better understand their health and give them the ability to take proactive steps toward optimizing it. As we move into 2026, these insights will provide the foundation for our initial entry into longevity. In recent years, there has been an explosion of innovative treatments across immunity, recovery, and improved metabolic function. We believe that by combining access to comprehensive lab work With a growing network of compounding and peptide facilities, we are well positioned to unlock broader access to thoughtful, proactive interventions that are not just reacting to certain conditions, but focused on helping individuals live longer, healthier lives. We believe each of these initiatives is laying the foundation for a future where a membership at Hims & Hers will cover the majority of conditions that impact an individual's everyday health. Eventually, we expect that we will transform our platform from a destination where customers come to treat issues to one where they come to prevent them. Alongside these opportunities, our teams are developing the technologies and data platform needed to deliver an increasingly comprehensive offering to tens of millions of subscribers. I'm excited to introduce Mo El-Shanawi, our new Chief Technology Officer, who is leading these efforts. Mo's experience in partnering with regulatory bodies to design industry-defining frameworks, along with his work scaling AI for life and death decisions, will be crucial in advancing Hims & Hers technological capabilities. While we'll dive deeper into our technology roadmap at a later date, I'd like to briefly turn it over to Mo to share his vision and approach to making us a truly technology-first healthcare platform.
Thanks, Andrew. I'm excited to be here and join the Hims & Hers team at what I believe is a critical moment in healthcare. One of the main reasons I joined Hims & Hers is the clear opportunity to drive change in an industry that has seen limited innovation, despite significant advances in technology. The pace of innovation in healthcare has frankly been unacceptable, but Hims & Hers is in a unique position to change that. With a trusted brand, a massive and engaged customer base, and consistent clinical support, we have already established a remarkable pipeline of structured data that providers and customers are benefiting from every day. We believe this will enable us to enhance every aspect of the patient journey, from initial intake to treatment, follow-up, and ongoing care. And with the addition of lab testing capabilities and the eventual planned integration of wearables, we will continue to build on this experience, delivering access to tailored and proactive care that can evolve with each customer. Moving forward, our vision is ambitious. It's to reinvent healthcare by making high-quality, personalized care accessible to everyone, everywhere. In the near term, we will focus on several key pillars as we work towards realizing this vision. First, we will ensure care is supported by a unified data and intelligence platform. Our multi-source learning system will not only improve and personalize access to care at scale, but also automate key processes like fulfillment, inventory, and routing to increase efficiency. And we believe our systems powered by AI will never plateau and will continuously improve over time. Second, we will be focused on building AI-powered personalized agents that are always on. This will create an end-to-end patient journey powered by AI that will be able to help personalize every interaction and provide 24/7 support to ensure continuous engagement and increase the likelihood of reaching a positive outcome. Third, our entire platform will be designed with global-ready architecture. Scalable modular architecture will allow us to continue to expand internationally, adapting different regulatory environments across regions. And we aim to build a secure, cost-effective platform that can seamlessly support millions of customers and begin fostering valuable partnership across the healthcare ecosystem. And finally, we will prioritize AI governance, safety, and ethics. We will foster responsible AI use with human oversight and bias mitigation, and are committed to developing our technology in an ethical manner. We believe these pillars will lay the foundation for a healthcare system that can learn and improve with each new subscriber that joins the platform. And I could not be more excited for the opportunity to help build what I believe will be the future of healthcare. With that, I'll pass it back to Andrew.
Thanks, Mo. We're looking forward to seeing the impact you and your team will have on how our customers are able to engage in their health on a daily basis. Before passing it over to Yemi, I'd like to touch on one more recent development. In July, we closed our acquisition of Zava, expanding our presence in the UK and establishing a foundation in other strategic markets such as Germany, Ireland, and France. We believe this acquisition and the talent it provides will accelerate our ability to expand into markets beyond Europe. In 2026, we expect to enter Canada with an initial focus on a holistic weight loss program timed to align with the anticipated first ever availability of generic semaglutide globally. We believe this represents a significant opportunity in a country where 2/3 of adults are overweight or living with obesity. While our initial focus in Canada will be centered on weight loss, we expect to launch additional specialties within the Canadian market over time. We believe our expanded operational and technological expertise establish a strong foundation to extend the benefits enjoyed by our US subscribers to geographies across the globe. It has never been more clear that we are in the early stages of unlocking the full potential of a customer-centric, world-class platform in healthcare. Customers love our approach, they're demanding we do more, and we're meeting that demand with confidence and impact. Our success continues to prove that consumers are better served when healthcare is personalized, accessible, and driven by a relentless focus on putting the customer first. This is the future of healthcare, and we're proud to be building it, person by person, specialty by specialty, and now market by market. With that, I will pass it over to Yemi to walk through the financials.
Thanks, Andrew. I'll start by providing an overview of our second quarter financial results before going deeper into our updated outlook for 2025. In the second quarter, we continue to see remarkable success across our platform, signaling that our strategy focused on democratizing access to precision medicine is resonating with consumers. Consumers are increasingly engaging with our platform across all stages of their care journey, from collaborating with providers to address and manage their conditions, benefiting from provider tools to access customized treatments, and utilizing app-based tools and provider access for their follow-up care. We believe we are just scratching the surface of what's possible, and over the course of the second quarter, have laid an even stronger foundation to elevate the future value we can bring to our subscribers. Our efforts translated into strong results in the second quarter. Revenue grew 73% year-over-year to $545 million, while we simultaneously maintain an adjusted EBITDA margin north of 15%. Expanding access to personalized treatment options and a wide array of tools is allowing us to attract new subscribers to the platform and also resulting in stronger retention. Subscribers increased 73,000 quarter-over-quarter to over 2.4 million, reflecting a year-over-year growth rate of 31%. We see continued robust subscriber growth across our dermatology, oral weight loss, and daily sexual health offerings that all sustain year-over-year subscriber growth rates above 55% in the second quarter. Strong performance across these offerings helped offset headwinds that came from offboarding GLP-1 subscribers on commercially available dosages, as well as a decline in our on-demand sexual health subscriber base. We expect headwinds from the rotation of our sexual health specialty toward more premium daily offerings for the next couple of quarters, but are excited to see over 40% of total sexual health subscribers and roughly 65% of new sexual health subscribers in the quarter benefiting from a daily offering, respectively. We are able to embed an expanding set of capabilities within our daily offerings that are not feasible to incorporate into our on-demand offerings. Today, our daily sexual health offerings allow subscribers to partner with providers to treat hair loss concerns, improve their cardiovascular health, support testosterone levels, and optimize vitamin levels. Over time, we expect this to have a meaningful benefit in retention and the customer lifetime value across our sexual health specialty. Continued subscriber adoption of personalized offerings, as well as the success of our weight loss specialty, continue to drive year-over-year growth in our monthly average online revenue per subscriber. However, in the second quarter, we saw a monthly average revenue per subscriber decline quarter-over-quarter to $74 from $84, primarily as a result of the offboarding of a portion of our GLP-1 subscribers. Now shifting to profitability. The second quarter was an exceptional demonstration of our team's ability to remain agile and deliver on the high standards outlined in our capital allocation framework across even the most volatile environments. Our platform drove $82 million of adjusted EBITDA in the second quarter. The complexity of our platform and future ambitions will necessitate a more nuanced organizational structure, one that is able to move in an even more agile manner and scale globally. In the second quarter, we took action to adjust to that new reality. Adjusted EBITDA was negatively impacted by approximately $7 million in the second quarter as a result of severance payments to former employees and sign-on bonuses used to attract new talent. Leverage on marketing and investment and gross margin expansion were the primary levers that resulted in second quarter adjusted EBITDA margins expanding nearly 3 points year over year. Marketing as a percentage of revenue was 40%. Investment was slowed at various points throughout the quarter as we saw volatility in marketing efficiency as a result of the onboarding and offboarding of a previous collaboration within the second quarter. Strong performance outside of our non-weight loss offerings as a result of improving retention from adoption of personalized treatment plans and rollout of new offerings was able to offset some of the volatility we observed within our weight loss specialty. Gross margins expanded 3 points quarter over quarter to 76%, primarily as a result of growth in specialties outside of weight loss. G&A costs were pressured in the second quarter as a result of the onboarding of new executives, as well as additional costs stemming from the decision to reassess our organizational structure. G&A as a percentage of revenue improved 1 point year over year, but deleveraged 4 points quarter over quarter as a result of these dynamics. A similar dynamic was seen in operations and support costs. Technology and development costs as a percentage of revenue increased 1 point year over year and 2 points quarter over quarter to 7%, reflecting increased investment in technology talent across the organization. This is an area that we expect to continue to invest in across the coming quarters, as we believe it will translate into an even better customer experience and be long-term financially accretive. In the second quarter, we meaningfully strengthened our balance sheet with the completion of a convertible debt offering in May. We ended the second quarter with a cash and short-term investments balance of over $1.1 billion. Meaningful investment was made in the second quarter to expand our ability to offer new form factors, automate processes within our facilities, and strengthen supply chains through significant investment in working capital. Free cash flow for the second quarter was negative $69 million as a result. We expect to return to positive free cash flow generation in the second half of the year. Our balance sheet provides a meaningful opportunity to deploy capital across both organic and strategic M&A opportunities. We will not loosen our capital allocation standards as a result of this flexibility, but have even greater confidence in our ability to accelerate efforts across the strategic growth levers that we believe will shape the future for Hims & Hers. I'll double-click into areas that we expect to receive the most meaningful share of investment. First, we expect to continue investing in deeper personalization capabilities, which we view as a critical component of our ability to democratize access to precision medicine. Our ambition is to move from a world of hundreds of treatment options to thousands over time. We expect this will unlock greater flexibility for our subscribers across form factors, as well as enable customized treatments to address multiple concerns concurrently, such as vitamin deficiencies and side effects within our specialties. This will necessitate upgraded equipment, additional facilities, and more extensive automation capabilities over time. Second, we intend to invest in capabilities that will enable us to gain deeper insights to better serve our subscribers, while simultaneously increasing investment in our platform to better leverage that data to address subscriber needs. We believe that responsibly harnessing data from potential future capabilities, such as lab testing and wearables, will allow us to better serve subscribers across multiple stages of their treatment journeys, including diagnostics, treatment, and follow-up care. And that investing in our platform will allow us to elevate the subscriber experience through even more expansive tools, such as AI coaches, chatbots, and more dynamic customer support models. Our belief is that these elements will increase demand for our platform, as well as drive stronger retention. Lastly, we believe that demand for a consumer-oriented healthcare model transcends borders. Our recent acquisition of Zava provides a foundation to build upon and deliver value to millions of potential future customers across the globe. With Zava, we have gained the infrastructure to serve consumers across markets such as Germany, France, and Ireland in the second half of the year. Zava will also play a foundational role in supporting our Canadian expansion efforts in 2026. We believe the combination of Zava's platform with our expanding engineering bench sets a foundation that unlocks the potential to expand in Latin American and Asian markets in the coming years as well. We expect our capital investment will bias toward unlocking new capabilities to drive subscriber value in the coming years. However, a robust balance sheet and strong free cash flow generation allows us to take advantage of moments when we believe the market value of our stock meaningfully disconnects from its intrinsic value. As of the end of the second quarter, $65 million was remaining in our buyback program. With that, I will walk through our outlook for 2025. In the third quarter, we expect revenue to be between $570 to $590 million, representing a year-over-year growth rate of between 42% and 47%. We are anticipating adjusted EBITDA in the range of $60 to $70 million, reflecting an 11% margin at the midpoint. For the full year, we expect revenue to be between $2.3 and $2.4 billion, reflecting a year-over-year increase that ranges from 56 to 63%. We are anticipating adjusted EBITDA in the range of $295 to $335 million, reflecting a 13% margin at the midpoint. Our outlook for the remainder of the year is based on the following assumptions. First, the fulfillment of compounded GLP-1 treatment available through our platform no longer utilizes 503B outsourcing facilities. This will result in a shorter duration shipment cadence for these products and lower revenue recognized per order. We expect temporary headwinds from in-quarter revenue recognized from shipments to subscribers who were previously on a shipment cadence of 90 days or more. Given the strength of the oral offering and the demand for management of side effects through compounded GLP-1s, we remain confident in our weight loss specialty's ability to deliver at least $725 million of revenue this year. Second, we closed our acquisition of Zava in July. Over time, our plan is to integrate our existing UK business with our Zava operation. We are still assessing the impact of this, but expect the Zava acquisition to deliver at least $50 million of net incremental revenue for the remainder of 2025. Third, we expect that we are entering an investment period for at least the next year, particularly in marketing and technology. Augmentation of our engineering talent with expertise in AI development and the scaling of global platforms is expected in the coming quarters. Marketing investment will be higher as a result of seasonality, in addition to investment to support the scaling of new geographies and offerings such as labs and hormonal support. We expect that adherence to our capital allocation framework that calls for a payback period of less than a year will enable us to continue driving 1 to 3 points of marketing leverage per annum. Lastly, we expect the continued transition toward personalized offerings to be instrumental in helping us drive long-term revenue retention of 85% or higher. Our expectation is that our on-demand sexual health business will continue to experience declines, but the effect will start to meaningfully dissipate in 2026 as we benefit from stronger retention gains from daily sexual health subscribers. We are entering the second half of 2025 with a great deal of momentum. More importantly, we've established a foundation of talent and capabilities that serves as a critical step in our ability to unlock immense value for millions of individuals across the world by democratizing access to precision medicine. We believe we are just scratching the surface of what's possible with a transformative healthcare model, and as a result, see significant opportunity across each of the future growth levers we've laid out. As always, I want to thank our subscribers, our partners, and our employees for their continued support in our mission to help the world feel great through the power of better health. Our success would not be possible without their support. With that, I will turn it back to Bill to kick off Q&A with 2 questions from our retail community.
Thanks, Yemi, and thank you to all the investors who sent in questions over the weekend. We received quite a few on the recently announced acquisition of Zava and our growing efforts to expand internationally. This is a multi-part question from the Hims House community. Why was now the right time to expand internationally, and what made Zava the right company to acquire? There are investors that are questioning the size of the opportunity here given the presence of government-run healthcare systems and the complexity that comes with operating across multiple countries. How would you respond to those concerns and the potential that this could distract from scaling the U.S. business?
Yeah, thanks, Bill. And thanks for the question. From my perspective, I think it's a really powerful opportunity to take a leadership role in bringing what we believe is this personalized, high-touch, affordable, precision medicine consumer experience globally. And so I think the acquisition of Zava was the first step in us taking a leadership position in replicating this model in the key markets. Now, I think with Zava specifically, we felt that the team and their ability to build a platform that has been scalable in unique markets with unique regulatory challenges was a testament to their execution and operational abilities. It's a team that we believe can continue to expand into new markets, helping us to launch in Canada in 2026, as well as in markets like Brazil, where you've got new generic semaglutide going live in the new year. So their ability to replicate, scale, and have flexibility with the technology platform with the range of regulatory environments we felt was incredibly powerful. And I think we've had the privilege of seeing dozens of companies that have tried this. And so the pattern recognition of what truly was unique was really there. Ultimately, we believe the international market is a focused effort, right? It's not a spray and pray model. We don't believe that there are dozens of markets that are required for a substantial revenue footprint. I think long-term, we believe there's a multi-billion-dollar revenue opportunity in just a handful of key markets. And I think you'll see us in the next 1 to 3 years going after those focus markets.
Thanks, Andrew. We also received a number of questions on the new capabilities and specialties that we'll be bringing to the platform in the coming quarters. This is another multi-part question from Onder G. How does the launch of at-home lab testing improve the business and support the broader mission of Hims & Hers? What impact do you expect it to have on the development of new business verticals? And do you expect this will allow you to introduce membership options that are more widely accessible, similar to what's been done with Amazon, Netflix, and Costco?
Yeah, thanks, Andrew. That's a great question. Altruistically, I have a real passion to get people access to this type of information at as low a cost as possible. I think it's absolutely critical when you think about transitioning the American healthcare system as well as the global healthcare system from one where patients are coming into the system to treat an issue versus coming to the platform to take advantage of preventable options. And I think at-home testing is going to be absolutely foundational across all of our categories going forward, as well as opening up membership opportunities like you mentioned. I think the simplification of not only what tests truly matter and when for a patient, but also really what gold standard optimized biomarkers looks like is really critical for this offering. Right? We live in a country where the majority of us die from preventable disease. And so there's a massive disconnect in access and education with regard to what these test outcomes should be. Being the average or being the median in the United States on your lipid profile where, the majority of us die from a heart attack is not great. And so I think there's going to be an incredible opportunity to educate patients on what tests are necessary so it's not massively overwhelming, make those tests incredibly affordable and accessible and not intimidating, and also educate patients based on who they are, their age, their dynamics, what those optimal outcomes and metrics can be. Now, ultimately, I think we can then not only get them that data, but help them with the next steps. And I think you'll see in these offerings that we bring to market that the lab testing is just the beginning. It's the beginning of then an opportunity to have very seamless abilities to treat and optimize your core risk areas. I think this will be ultimately a foundation and infrastructure, as you can imagine, that then allows for a Prime-like or Costco-like healthcare membership, right? That transitions patients from coming to us for a single condition all the way to moving them towards ultimately a goal of preventative health. I think you can see this in the steps that we are taking, not only in the testing roadmap that we've been outlining, but also in the recent leadership additions, like Nader Kabani from Amazon, as well as Deirdre, who led product at Robinhood and owning her, the membership platform over there. I think we're staffing both the technology, the infrastructure, the raw capabilities in our facilities, as well as the team to go after what we think is a broad membership that sets a new standard for what healthcare ultimately should be for everybody globally.
Thanks, Andrew. And thanks again to everyone who sent in questions. With that, I will pass it back to the operator to begin the regular way analyst Q&A.
At this time, if you would like to ask a question, press star, then the number 1 on your telephone keypad. To withdraw your question, simply press star 1 again. We kindly ask that you limit your questions to 1 and 1 follow-up for today's call. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of Maria Ripps with Canaccord. Please go ahead.
Great. Thanks so much for taking my questions. First, can you maybe help us understand a little bit better sort of some of the core dynamics between your core business and weight loss segment, both in Q2 and sort of expectations for Q3? So I know you reiterated your weight loss target for this year, but anything you can add in terms of sort of underlying trends within your personalized GLP-1 offering? And then I have a quick follow-up.
Yeah, thanks for the question, Maria. Maybe I can start. So I think that what we saw quarter for quarter in Q2, there's obviously some pretty material headwinds in the GLP-1 footprint as we offboarded the folks that run commercially available dosages. Across the weight loss specialty, we see continued success within our oral offering as well as personalized sema. But when we look at kind of like the core business, I think we've spoken around this a couple times before. What we're seeing is really, there's a drag coming from the sexual health on-demand component of the business. And that's really a conscious effort. What we've observed over the last couple of quarters is as we've expanded the sexual health daily offering, that continues to grow north of 55%. We also do see very strong retention across the daily relative to the on-demand business. And so if you pull out the on-demand sexual health business, many other specialties such as our dermatology business, the oral weight loss, the sexual health daily are all growing north of 55%. We're doing a conscious effort just to make the overall base of our sexual health customer a lot healthier. As we start to lap these dynamics in 2026, we would actually expect to receive the benefit both from lapping, but also the stronger retention on the daily health users. And so really, I would say is like the area where we're seeing the most softness, obviously quarter on quarter, has been the GLP-1 side of the house, mainly employing not commercially available dosages. But then there's also just the dynamic of the sexual health on-demand business. Outside of that, we're seeing strong growth across many of our other specialties.
Got it. That's very helpful, Andy. Thank you. And then secondly, with the generic GLP-1 sort of expected to launch in Canada next year, could you maybe talk about some of the sort of cross-border dynamics that we should keep in mind? Are there any certain sort of legal nuances that sort of could make importation feasible from a consumer or provider perspective?
Yeah, Maria, I can take that question. Generally speaking, our approach with bringing the generic semaglutide to market in Canada is going to be very by the book, right? And so there will be, from our perspective, no cross-border dynamics between the Canadian markets and the U.S. Shipments will be sent to Canadian addresses. They will be through partnerships with large generic manufacturers who are manufacturing and bringing them into the Canadian market. So there should be no cross-border dynamics that we will be expecting from our standpoint.
Got it. Thank you, Andrew. Thank you, Anna. Appreciate the call.
Your next question comes from Craig Hettenbach with Morgan Stanley. Please go ahead.
Yes, thank you. A question on the HERS business, whether it's a rough percentage of revenue or subscribers, just kind of an update on how that business is performing and some of the key growth drivers seeing on the HERS side.
Yeah, thanks for the question, Craig. We still see the HERS business continuing to grow at a very robust pace. It's primarily benefiting from the dermatology business, both in terms of skin as well as hair. We're also seeing strong demand for the weight loss offering specialty continue, as well as our mental health offering. And then in the latter half of this year, I think we're very excited to bring on hormonal support, specifically for menopause in the HERS category as well. And so we do still see several catalysts continuing to drive a strong outlook for the HERS business.
Got it. And then just a follow-up question, and appreciate the color on kind of the near-term investment cycle. Specific to AI, can you talk about how you're approaching that, whether it's the returns you expect to get on that or just reasonable timeline of that having an impact on the business as you move forward?
Yeah, Craig, thanks for the question on that. We aim to build the AI strategy in such a way where you're making very tangible and tactical improvements very quickly. I think in the age of the AI explosion, we are really benefited by the fact that our platform touches tens of thousands of patients every single day. And that allows for us to build use cases for both providers and patients or pharmacists that we can see nearly immediately driving results. And so I think there's going to be an agent-centric model here that delivers on-demand 24/7 access and support across the stack, whether it's the provider side, the patient side, the pharmacist side, et cetera. But we aim in the next 3 to 6 months to be building out technologies that are immediately improving efficiency, improving engagement, providing support across the stack.
helpful. Thank you.
Your next question comes from the line of Eric Percher with Nephron Research. Please go ahead.
Thank you. Appreciate the incremental disclosure in the queue around the GLP-1 value. And I want to make sure I'm understanding that, we see a value of $190 million this quarter down from $230. Sounds like there's some revenue headwind. Should we assume that there's a pretty significant continued decline in Q3 and Q4 as we're modeling out the year?
No, I think it's a great question, Eric. We saw the meaningful step down primarily as a result of offboarding folks that were on commercially available dosages of GLP-1s. I think what's remaining for the duration of kind of Q3 and the rest of the year are products that we intend to have on the platform, whether that's the oral weight loss product or personalized semaglutide. So our expectation is to see renewed and continued growth. There are some revenue recognition dynamics that will result in a steeper acceleration in the fourth quarter. We're just shipping in smaller batches, which also carries implications for the revenue recognition. But on a go-forward basis, we see very strong demand for the weight loss specialty holistically, and as of now, are expecting that to continue.
And we should think of the 725 inclusive of oral, which you've stated is over 100 million. Is that the right way to think about the balance of these components?
Yeah, correct. So like the 725 is holistic across all of the weight loss components. So it's the full holistic weight loss offering.
Appreciate the detail.
And Eric, that includes, liraglutide, branded medications, oral, personalized, et cetera. It's the whole specialty.
Your next question comes from the line of Ryan McDonald with Needham & Company. Please go ahead.
Thanks for taking my questions. Maybe first on the Canadian expansion, are you intending to expand in Canada under the Hims & Hers brand or the Zava brand, given sort of the acquisition there? And as we think about the opportunity with generic semaglutide in Canada, pricing for the branded already is at fairly affordable price, the $200 to $400 range. Do you expect sort of a similar magnitude of sort of unlocking of that market at the generic price point relative to the difference in pricing in the U.S. we saw from branded versus compounded? Thanks.
Yeah, Ryan, great question. We will be leveraging a lot of the expertise of the Zava team and technology stack that has already proven to be able to replicate a lot of diversity in models across regulatory environments. But the actual presentation of the offerings in Canada will be the Hims & Hers brands, both brands independently. On the second question, so right now, the average pricing we're seeing in the Canadian market for the branded pharmaceuticals, as you said, range from $200 to $400. We see it most of the time in the mid 300s to 400 range. Given the conversations we've had with the major generic manufacturers, of which there's quite a few who are going through the process with Health Canada to get their generic approved, we expect the consumer price point to be around $75 to $100. So upwards of a third or so of the current branded price. So we do think there's going to be really structural access unlocked with that type of pricing distinction. And in the Canadian market, where roughly 2/3 of the population is struggling with weight loss or struggles with obesity, we think that reduction is going to be incredibly material.
Super helpful clarification there. Thanks, Andrew. Maybe follow up for Yemi. In your prepared remarks around the outlook for the remainder of the year, did you say that average revenue recognized per order will be down in the second half versus first half? And if so, does that imply an acceleration in subscriber growth expectations on a quarter-over-quarter basis? Thanks.
Yeah, thanks for the question, Ryan. I think when we were stating that there would be a change where we recognize or we would have lower revenue recognized per order, that was specifically to the personalized GLP-1 component, just given the regulatory dynamics there of the pivot towards 503As for that specific specialty. what will happen is you'll have on each order a lower amount of revenue recognized, but then the order velocity will be more frequent. And so that's why you see an acceleration also happening in Q4, is that there's just greater compounding of orders over time as you progress the quarters.
Okay, so average monthly order or average revenue per subscriber is not necessarily going to be down sequentially.
Yeah, no, not necessarily. So it's specifically in reference to the one offering.
All right, thanks for the clarification.
Your next question comes from the line of Brian Tanquilut with Jefferies. Please go ahead.
Hey, good afternoon, guys. Maybe just to follow up to some of the discussions, as I think about just the marketing spend that you're planning for the back half of the year, how should we be thinking about patient or client acquisition cost on a per person basis, per capita basis? I mean, how are you trying to manage that?
Yeah, thanks for the question. So we do intend to invest, pretty in a pretty robust fashion in the second half. That said, I think we still are going to hold to our standard and our capital allocation framework. So we do expect to be able to manage a payback period well below a one-year period. That said, I think we are looking to, as we progress through the year and launch new specialties, have the firepower to lean in those. The environment in Q2 was volatile, as we mentioned in the prepared remarks, and so really giving the teams the ability to learn in the third quarter with a more stable product suite, particularly in weight, is something that we're excited by. But then kind of what you see happen, as we turn the corner around these investment periods, the benefits accrue pretty quickly, and so you kind of see that taking place in the second quarter, where we were able to maintain very robust growth while also holding back investment, particularly in the core categories for a period of time. And so if you kind of look at how quickly the margins expanded to north of 15%, we expect that to be our ability to be able to do that again in the future as well. But really in the second half, we're leaving flexibility for marketing of new specialties as well as newer geographies, the ability to learn within some of our existing specialties, and then also just talent acquisition. As Andrew mentioned, we do expect to lean into AI and realize returns there very quickly. That also does come with a cost to talent, and that's reflected in our guidance assumption for the back half of the year.
Okay, that makes a lot of sense. Maybe just to follow up on inventories, pretty steep increase quarter over quarter. So just curious how we should be thinking about inventory levels going forward, and there's specific drivers pushing that or that drove that increase quarter over quarter. Thank you.
Yeah, I think just as we historically look to, I think there's a couple of factors. As we historically look to launch new specialties, we want to ensure that there is a durable supply of inventory available. Then as we also just look at the strength of our balance sheet, some of the volatility occurring around the world right now with tariff uncertainty, the ability to leverage the balance sheet and the free cash flow now to take advantage of predictability was something that the management team opted to want to lean into right now at the moment. It's not to say that we're going to have similar step-ups in inventory each quarter. This is more probably of a quarter where there's a little bit of an anomaly, just as we look to strengthen our supply chain across several of the specialties, given some of the dynamics going on there.
Awesome. Thank you.
Your next question comes from the line of George Hill with Deutsche Bank. Please go ahead.
Yeah, good afternoon, guys, and thanks for taking the question. Yeah, I mean, you kind of leaned into where I was going with your last answer, but I guess I wanted to talk about the front end of the SEMA franchise. And I guess, can you guys confirm that you kind of source all your SEMA API from high-quality FDA-inspected CGMP-type facilities? And if it's coming from overseas, I was going to ask if you could talk about the tariff risks, particularly if it's coming from China and if any of that's an issue. And then I had a very quick follow-up, which is, what's the right way to think about your 503A capacity, given how quickly the business is ramping? I don't know if the right way to think about it is in dollars and doses. Would love any commentary on that. Thank you.
Hey, George, I can probably take the first half and Jamie cover a second. We have a number of API suppliers across the stack, both domestically and overseas, that we leverage to serve all the customers on the platform. I think to your point, the most important question there is all of these are through FDA-registered facilities, CGMP. They undergo rigorous testing for things like potency, identity, and they're all verified with third-party testing, which I think gives our team, our safety team, and our patients a great deal of confidence.
And then with respect to your questions around tariff and capacity, like at this moment, we don't see any meaningful pressure. Coming and embedded in our outlook is that there will not be any meaningful pressure coming from tariffs. Capacity, I think we have found numerous different ways to ensure that we do have the capacity to be able to support the build up subscriber base, not just for this year, but over the coming years. And so the CapEx investments and other vehicles that we've laid give us the confidence that we'll have the ability to fulfill all of our customers' needs for years to come.
Thank you.
Your next question comes from the line of Jonna Kim with TD Cowen. Please go ahead.
Question. Last quarter, you mentioned the 2030 target. Just wanted to get a sense of the mix of international and the U.S. business in that long-term target. If you can give us any color about how big the international business could be over time. And then just a follow-up question, any changes in your marketing strategy? Do you plan to still focus more on the weight loss side or the core offering? We'd love to get any color there. Thank you very much.
Yeah, thanks for the question, Jenna. So I think that we see several future growth levers to achieve or exceed the 2030 targets. International will definitely be a component, but we also still see an immense amount of opportunity here in the U.S., whether that's in the form of the new capabilities or specialties that Andrew went through in his prepared remarks. So there's not necessarily an exact split that we're giving right now, but each of the elements and growth levers that we are currently investing in, we believe are billion-dollar plus opportunities individually. So whether that's new geographies internationally or a combination of new specialties that we're going into, or continuing to invest and deepen the breadth of personalization offerings and consumer experience on the platform. All of those are things that we believe have the ability and the potential to have outsized returns. And so that gives us the conviction to be able to release a target that's about 5 years out. With respect to the investment in marketing, I think we are going to continue to hold a very high bar on the spend and look for the 1-year payback period or less. That said, I think over the last couple of quarters, we've received several learnings across the investments. And so you will see us do specialty-specific investments, both across the core offerings as well as multi-condition marketing as well. We'll continue to iterate and look to calibrate that spend. But really, I think as we're doing that, we do expect to still hold to the capital allocation framework that calls for the payback period of a year or less.
Got it. Thank you.
Your next question comes from the line of Daniel Grosslight with Citi. Please go ahead.
Hi, thanks for taking the question. You mentioned launching hormone therapy in the coming months. I was hoping maybe if you could put a bit of a finer point on that. Is that more of a 4Q launch now? And if you can dig in a bit more on what investments you need to make ahead of the launch and the cadence of that, both from a CapEx and OpEx standpoint. And if you're going to be compounding these offerings in your own pharmacies. Thanks.
Thanks, Daniel. I can take some of that. Probably can't give you too much on the specific date where the communications team might be a little bit frustrated with me, but would expect it relatively soon. The offering, I think, is going to have a really wide range of treatments, inclusive of compounded generics, and I think eventually, branded and specialty offerings through a network of partners and offerings, which we're really excited by. And this will be delivered predominantly through our facilities long-term, as well as through partner facilities in the beginning, both across perimenopause, menopause, and then low testosterone on the men's side of the business. And Yemi, if there's anything on the financial preparation that you want to reference.
Yeah, I think a lot of it we've actively done and we're continuing to do. And so the embedded in our guidance is all of the investment around needing to prepare for the new launches.
Okay, got it. And maybe if I can just tackle the core revenue with my follow-up. The revenue ex GLP-1 was down slightly sequentially. Yemi, you mentioned derm, oral weight loss, and daily sexual health is growing 55% plus. I suppose much of that was offset by the on-demand sexual health rotation. Is that right? Can you just dig in a little bit more on why we aren't seeing more sequential growth outside of GLP-1s?
Yeah, I think that's a fair interpretation. I think in the second quarter also had the nuance of it was the first quarter where the apostrophe business was no longer present, but the vast majority of the headwinds that we're seeing is a result of the deliberate rotation toward a higher quality sexual health consumer. I think over time we expect a few things to happen. As you kind of hit 2026, one is you just get the benefit of what we have already observed to be inherently stronger retention, of that user base. The second is just the pivot, as the business, the subscribers contract, starts to wind down and wane. And so I think that this is probably a conscious multi-quarter transition, but as we kind of hit the back half of 2026, we would expect it to be accretive and probably the right long-term move for the business.
Got it. Thank you.
Your next question comes from the line of David Larson with BTIG. Please go ahead.
Congratulations on the good quarter. Can you talk a bit about the 503A revenue growth rate year over year? I'm assuming last year a good portion of the GLP-1 revenue was personalized. So just any sense for what the 503A growth was year over year? It seems to me like you're guiding to $100 million of GLP-1 revenue in 3Q and $100 million in 4Q, which would be a significant decline. Maybe I'm being sort of overly conservative with my view there, but just thoughts on the 503A growth going forward would be helpful. Thank you.
Yeah, so I think that the concept of 503A growth versus 503B is not really nuances there as a result of the shortage dynamics that were present last year. The revenue was filled out of a 503B partner. And so I think that, the way that we more think around it is the weight loss specialty, in aggregate, and then the various components, underneath that. We expect to see continued, robust quarter growth across each of the components of the weight loss specialty, the oral side, and the GLP-1 throughout the duration of the year.
Okay, great. And then Andrew, I think you were talking about preventive care, things like perhaps counting steps, counting calories, looking at your food intake, your water intake. I love the sounds of that. It sounds like it's all natural. We've had some growth in some new businesses in that area. Just any more color there would be very helpful.
Yeah, absolutely. This is something that I think the platform is really uniquely positioned to deliver on. When we think about personalized treatment plans, it's not just about personalized medicine, right? It's personalized content, personalized agents, personalized gamification and technologies that they're able to use to stay adherent and to stay motivated. You can imagine, for example, an individual who's getting treated with a personalized medication for weight loss, also having access to an on-demand 24/7 nutritionist agent, right? Who knows everything about them, who is right there with them, checking in on them throughout the day, helping them with recipes, helping proactively count their calories with photos of the food that they're eating. Same thing on the mental health platform, right? Patients that are struggling with sleep, you can imagine an agent that is on demand, available with advanced cognitive behavioral therapy training to help that patient improve their insomnia. So I think there's a real technology forward transition that the company is making right now, led by Mo Elshenawy, our new CTO, and there's a reason we brought him in for this exact reason. But we believe a lot of the future unlocks, the stickiness of the platform, the benefits of the platform are going to be in the layering of technology across the stack that then enhances the personalized medications you're getting.
Fantastic. Thanks very much.
Ladies and gentlemen, we have reached the end of the question and answer session. This will conclude today's call. Thank you all for joining. You may now disconnect.
Wow.
No
okay.
Novo questions? Are we serious?
No Novo questions.
That's crazy.
Yeah, that's surprising. I was afraid that they'd all be Novo questions.
Yeah, same.
None.
Man, I feel like these questions were a lot better than last time too. Last time I remember them being like all about GLP-1 and personalized semaglutide.
They were really good. Yemi was the MVP there. Some of the answers I didn't particularly like, but overall, like that, a lot of nuggets were dropped. I don't know. What did you guys think of the call?
I thought it was pretty good. I think some of it was a little fluffy. Some of it just AI agents and we're gonna grow every vertical $1 billion. I don't know. I think it was a little fluffy, but overall I liked it. I think, like you said, they dropped the little nuggets. I liked my biggest, and I think you too, Roy, was the payback period being well below a year. So that's a
Yeah.
nice nugget.
Yeah, that marketing spend as well. Reiteration and confirmation of the $1 billion. That there's a lot of different ways to get there, but they're very confident in that. International stuff was interesting. Yeah, the Mo's piece was like I'm gonna have to go through that a little bit. I'm glad he talked, but
Yep.
I didn't feel like that was fluffy. But I don't know. It's
Definitely broad. Like he just kind of
Yeah.
reiterated broad AI topics within healthcare. It's like, yeah, it's like that's sort of a roadmap that anyone could think of with healthcare. It wasn't
And
like
he's been-
very. Yeah. Go ahead.
and he's been there like a month and a half, so I mean,
Right. True.
it's fine. But
Travis,
What do you guys think about Latin America and Asia?
They said the possibility to expand to it, right? They kind of just hinted at it.
Yeah, of course, it's
In
not
the coming
short term,
years.
but like
Yeah.
even in the coming years, what do you guys think?
I don't know how much money they're going to make there. I don't necessarily think they can, like, even in Canada, when they were talking about the average that they can sell it at was much cheaper. And so it's going to be even more amplified in other markets that don't have as much disposable income. Or, I mean, they can cause a disruption, but I don't know what their margins are going to be like.
Yeah, maybe in Asia they could do well, like in Japan or something like that. South Korea.
Yeah, but everybody's already skinny in Japan, bro.
Singapore.
Well,
Yeah.
no, the issue with
But India's
Japan
not a weight
is
loss company, dude.
it's that won't be as much of a weight loss thing, but I mean it's
But ED will probably
there's
be
issue with
good.
fertility. Like fertility stuff is
Yeah.
a huge issue, and any problem related to aging. Like if you look at the age curve there, it's substantial. China would also be an interesting market too. Now I know the population demographics, but I don't know like the healthcare structure. So I don't know enough
Yeah,
in those
exactly.
fields. I'm very glad that they were like possibly in the coming years. If they're like, hey, next year we're looking at, I'll be like, oh boy, what are you guys doing?
Yeah. Expanding new countries every 6 months would be kind of insane.
But it's gonna
Contemplating.
look different in every single country that they go to. Like United States, Canada is closer to the United States than probably anything, but different healthcare structure. But as far as like the demographics and everything, that needs going to be different everywhere you look. I did like that they touched on wearables a number of times,
Mhm.
which is nice, and then of course the Tribe Labs. I think that's going to be really beneficial to the flywheel, but.
Yeah, and a lot of chat on agents as well. Like he was going off towards the end there on how agents could essentially provide this like holistic end-to-end experience because they already know everything about you and they already have the personalized, treatments for you that are delivered on a monthly basis. And so the agents would provide a lot of they would fill in the blanks essentially.
And that would be something where I would become a major customer is because I actually do have an app that I use to track my calories. I use other apps for other things, and so like if they can combine that into one platform, and I pay like a Costco, Amazon Prime subscription,
Yeah.
Yeah, that could be a great solution, actually.
Yeah, I mean, like I think that's a through line, right? That a lot of people maybe miss is that today a lot of it is about the personalization, but tomorrow a lot of it is going to be about the data.
yeah. At the end of the day, I think all we should really care about, like SoFi, is members are growing, right? Like the more people they reach, the more they grow, the more they expand their brand, the more they, right? I mean,
about SoFi?
No, I'm saying
No.
like SoFi.
Oh, okay, got it.
To an extent, like the thing to keep an eye on. Although I love the answer. I love the color in the call itself and the slide deck, 10Q as well on the marketing spend. Like hypothetically, Nate, if they said the opposite, they're like, hey, we're going to increase marketing spend a ton. Where cost of acquisition is going up, payback period is getting larger. That's the opposite of what they said. I'd be like, well, adding users is great, but if your payback period is 3 years.
Yeah.
That's rough. I love that they're, but yeah, it seems like cost of acquisition is going down. Stickiness of the product is going up. Flywheel is getting built out. So this is not the best quarter. It's the worst quarter since I've been an investor.
Yeah.
I don't see anything like thesis breaking here at all. Yeah.
Yeah.
But at the same time, like it dipped. I'm not going to rush in and buy this dip. They made it clear themselves from the way that they operated the buybacks is like our stock isn't on the cheap side. It's
I
just
really
not.
feel like at this point it's just fluff because the fact that it didn't even buy in April is weird to me. I mean, the stock was like what, $22 then?
Yeah.
Last time they bought,
$25?
the stock was at like $15.
Yeah.
Yeah,
If I'm not mistaken.
Honestly, I think it was too early for them to do a buyback. I don't know if the goal is to pump the stock or
I feel like it's just a pump a little bit, to be honest.
do it if you're PayPal, not Hims. Like, come on.
Yeah.
Yeah, I mean, why do a buyback and then like issue? I mean, issuing convertible notes was actually a great deal for them.
Oh yeah, yeah, no problem. With that.
Incredible terms. So yeah, not really related. I agree that it's not a thesis breaker for those who own it, because I mean, if you own Hims, you should be expecting like most of what happened. That's not really anything that you could say is like a huge surprise. I mean, we knew the core business was decelerating because of the focus in GLP-1s. I like the fact that GLP-1s revenue is decreasing because it's kind of says that they're, I mean, being at least more cautious and not trying to go 100% towards personalized GLP-1s, because otherwise they would have like probably hit the estimates and even beat them by a large margin. But I mean, I'm not sure if the questions were really the best ones. It's always like I always feel that analysts don't do a great job covering IMS.
Yeah, I thought it was very good in the very beginning. A lot of those analyst questions, and then it got worse towards the end. Like the guy that was trying to get the 503A, like they're not going to give that. But his math was bad. It was like $100 million each quarter from 503A or GLP-1s. I'm like, that doesn't add up. Like they guided on 740 for the year. They've done a huge chunk. So like, unless you're banking on literally no, I think he was confused that 740 million was all GLP-1 revenue. I don't know.
725 is like all, yeah.
Yeah, it's like it's bad math and a bad question. Like
it's like 100 million this quarter, 100 million next. It's like
kick that guy off. Let Manuel ask the question next time. So
well, this is what I was saying in the chat. I was like, look, I love the fact that they're including retail questions, but including 2 retail questions from the entire retail community, and then having everybody ask a follow-up, and there's like 10 analysts on the call. You're like, okay, well, cool. It's just, like a lot of those analysts, because they're covering dozens of companies, just have uninformed takes because they don't cover this as in depth as a lot of the retail investment community does, right?
Yeah.
Manuel, if you had a chance to ask a question, what would you have asked?
I mean, I'd have to think about it, but maybe I would go after the deceleration in the core business, like how they expect to not really to like reaccelerate, but how if they really think it's because of the push towards like the marketing spend to GLP-1s, or if it's the customer acquisition cost that it's getting higher and higher, and so they're not really pushing that much spend to be cautious, let's say. I mean, some clarity, but of course I'd also love to know more about the drama with Novo, but I'm pretty sure Andrew would give like a random answer and not like always running from the point like he did last earnings call. But yeah, probably around the core business, because I mean it's great to see that as a percentage of revenue GLP-1s is getting smaller. That's a pretty good sign. But if the core business is decelerating and the GLP-1s part is becoming a smaller portion of revenue, then the deceleration in the overall growth will be really like fast, let's say, unless they are really because I mean launching testosterone could very well reaccelerate the core business, or launching the at home testing lab would also be probably a great lever. So I would probably ask what they expect to be the driver of reaccelerating, because I mean they have to reaccelerate. Like growing 19% the core business is good, but based on what they achieved in the past, on their track record, on everything about him, like all the opportunities that they can push forward, like I think growing 18-19% isn't really the what they want. I mean, I'm sure the management really wants more, and I mean based on the guidance for 2030, that implies 25 or 26 CAGR or something like that. So they really need to accelerate. I mean,
Yeah, I mean, also just imagine all the products that they're going to have out between now and 2030, right? Like you can assume 1 to 2 new products every single year at minimum between now and then. And I just think that like every subsequent product that they launched has hit 100 million in run rate faster than the previous product they launched. And I think GLP-1s
And
were the latest.
I think that's what they're expecting in Q4, because if you do the math of the first 2 quarters and the Q3 guidance, and then you subtract that from their full year guidance, they're looking to do 640 for Q4, and that's at the midline. So it seems like they expect acceleration, and they did comment on that a little bit, that they expect Q4 to be up, acceleration.
but you also need to include the 50 million from Zava.
True.
At least 50 million.
At least 50 million, yeah.
Well, that's actually something that's interesting. Is they acquired Zava. It was after their prior quarter, so that wasn't built in the guidance, and they just reaffirmed the guidance, and they also said
that's
Zava
what I was
added
going
50.
to say.
Yeah, so that's basically that's telling me like if they didn't buy Zava, they would probably be lowering guidance, which is interesting.
Yeah.
But to be fair on the guidance piece, they've always been conservative. I mean, besides this clearly 1 quarter.
No, but it wasn't conservative. It was the other way around.
It's very aggressive. I
Because
thought
if they reaffirm the same guidance, and now they expect at least $50 million from Zava, that means that without Zava, they would probably miss the guidance or lower.
But my overall point is that I think they'll still be full year guidance by 50 million. So I think even though they got it for 2.35 midline, I think they'll get 2.4 to 2.4.
I think reiterating, even with the Zava point, I think that's just a safe bet, right? Because they can always increase guidance for full year in Q3, right?
Yeah, and that's my point. It's like they're always a conservative management team. So I just don't think they would add it because they just want to be conservative and then just overperform.
At some point over the next 30 to 60 days would be my guess, is they launch the new product lines, and then they can assess to say, okay, like how much, based on how much it's accelerating in the first month or 2 months, or what the marketing push looks like, which they're going to be spending more. They can say, okay, how much do we expect to get in Q4, and then just raise it in Q3.
Yeah.
So
and something that's
go ahead.
Go ahead.
I was going to ask, what did you guys think of the gamification comment by Andrew?
Yeah, I didn't catch that. I saw you posted that in our private chat.
I'll give you the exact thing. It was towards the end. He said, "This is something that I think that the platform is really uniquely positioned to build around. When we think about personalized treatment plans, it's not just about personalized medicine, right? It's personalized content, personalized agents, personalized gamification, and technologies that they're able to use to stay adherent and to stay motivated. You can imagine, for example, So
like you get points, maybe if you log your weight every day and stuff like that, and that goes towards kind of like Robinhood's approach to go Gold.
I don't hate it. Like if gamification has a negative, well, exactly. Like Duolingo is a great positive example of healthy habit of learning a language. If they make it fun and rewarding experience, you do it more. That's a good thing for the business. That's a good thing for you. And HIMS is positioned for that. So I'm curious what that looks like. It sounds like that's something that maybe Mo will touch on, like in the future as they build up. But I don't know. That word stood out to me, and I'm like, whoa! Like, I don't think I've thought of that for HIMS, or thought of HIMS in that way in the future. I don't think it's a bad term. Like, it just depends how it's done. But I think it could be very compelling for the stickiness in the product to actually improve. So
yeah, I'm a big fan of gamification, so I think that'd be cool. I'd be curious to see how they do it though. But having the CPO come in, I think that'll be interesting to see.
Tevis is all about the degeneracy, so he wants the degen side of gamification.
No, man.
Lose 10 pounds and we'll give you $10 or else.
Look, I think the growth of the platform has been fairly seamless to date. And I think what they signaled in this call was like, hey, we're going to be spending a lot more for that growth. And if it wasn't for, a couple of components like Zava or new product lines and the GLP-1 revenue that was down and all the money that they're spending on this new executive team, like it seems as though they're not struggling, but like they're actually putting in way more of an effort to get the growth that was just coming in abundance over previous quarters with ease. That's the through line that I sort of got. Like that's the vibe that I sort of got from all of the things that they were saying. Yes, the payback period is short, and yes, they have a flywheel, and yes, they will continue to grow, but it's not going to be all sunshine and rainbows as it was in previous quarters, where it seemed like they can throw up triple-digit growth rates like it's nobody's business without really even, breaking a sweat almost, as to say. Is that just me? Like it was a more nuanced guidance perspective. It was not as like bullish as any of us would have been expecting going into the call.
Yes, no, I agree with that.
Yeah, I thought that they'd probably raise guidance a bit with the Zava acquisition, and they didn't. And so it's not a miss, thankfully. But I don't think the price action here is ridiculous either. Like it is what it is. It's a miss. It's a reaffirmation of guidance despite Zava. There is some weakness here, and this is basically on the back of amazing, ridiculous quarter after quarter after quarter after quarter, which I think quarter 3, quarter 4 last year is the best. But so.
I think it's important too to like we're up 125% year to date, right? And so like people are looking for reasons to sell, and if a $5 million miss is a reason to sell, then I think fair enough.
That kind of raises a good question. What do you guys think of the current valuation?
So I think that's where I was going, with my comment was like, if the Q2 results were what we had and I was buying it at $55, I would feel much better than after having heard that call, because like this comment says, right? Like they're taking initiative, they're making the investments, their core products are not growing as fast as previous years. Like we knew this was going to happen to some degree, but it's not like this is the most brain dead, easy money stock for me to invest in, because the valuation is like insanely cheap relative to what the company is doing. Like if the company is not consistently raising guidance, and if the company is not growing at the same pace, and you do see headwinds, like you just subtract out the GLP-1s and their revenue is not as like sexy as it might look at face value. Like obviously that plays a part in the valuation, and obviously that plays a part in what we can expect from an ROI perspective, especially when you layer in all of the macro risks with regards to the lawsuit and others. Like in the past, by an hour ago, I could be expecting the macro risks to be offset by the fact that this company is growing triple digits and they're just throwing up amazing numbers, and it's like the roadmap is clear, and if you can steer clear of the lawsuit risks, you're going to be fine. But now, if the road is not as clear as it might seem, and if they're having trouble to keep up those growth rates, and on top of that, you layer in the lawsuit risks, then it's a more nuanced type of investment to make, right? And
I think also we still have to remember that their guidance is still 65% year-over-year growth, right? And they've reiterated it now 2 quarters in a row. So I don't think as a valuation standpoint, it's cheap. Like you said, like you're not looking at this and going, oh, this is an easy return of the next year. But I don't think it's massively overpriced. I'm not looking to rush, but I'm not looking to buy. So
I mean, your point about growing 60% this year, I mean, we can't really base ourselves on that, because we're leaving the year at probably 30% growth. So
from full year, full year.
Yeah, I know. I understood.
Yeah.
But that's mainly because of the 100% in Q1 and this one, which was still pretty high. So in 2026, if things continue like this, they'll probably grow at like 20-30%. probably depending on how testosterone goes, maybe 35%. I mean, it's really unpredictable without knowing how the new verticals will be like in terms of success.
For sure.
But
now, if I told you, to that point that Manuel makes, like if I told you, hey, here you have a company that's growing 30%, let's say, in 2026, and they have this lawsuit risk on top of them, and they're at this valuation, you'd be like, like I'll have to do some more reading, and I'll like it's not an absolute immediate yes.
Yeah.
That's what I was saying. I mean, I'm not saying it's expensive and it's overvalued. I mean, not really saying that, but I don't think it's that no-brainer opportunity that it was
100%.
once, like a few months ago, and even last year. I mean, because it's up. Last year it finished the year like up 175%. This year is already up over 100% again. I mean, it's normal. I mean, it's the fundamentals are improving, but the price is also increasing a bit faster, let's say.
Yeah. 100%.
So it's not crazy just to say that HIMS is not the cheapest stock in the world, because I'm sure we'll see a lot of posts from people continuing to say 100x from here and saying that game changer news and whatever. Like, yeah, I mean, I don't think it's expensive. It's not a Palantir case, obviously. It's not really something that you would look and right away say, oh, this is crazy multiples. It's not really justified. But I totally agree with Tevis. It's something that if you see at first glance, you'll say, oh, pretty good numbers. However, I need to do some research to understand if the valuation is good.
Yeah, definitely. Risk reward definitely isn't as enticing as
And
it
it's
was
always
in April.
dependent on like each one's perspective, because one person expects something, another expects a different scenario by 2030. So it's always pretty subjective. But I'd say it's not really. I mean, it's still at $55 even after this crash. So if we were talking about $55 like 1 year ago, everyone would like, okay, let's do it. $55. I mean, no problems. And now
it didn't fall that much. It didn't fall that much. But like, if you were to put HIMS on a scale for me, where in previous, like after Q2 earnings, after Q1 earnings, it was like strong buy. Like, I'm buying this, I'm buying options on it, I'm buying, leaps on this. I'm not selling covered calls on this. Strictly based on fundamentals, right? And then after the Novo partnership dissolving and the lawsuit risk happening, it would still be a buy. I'm buying it and I'm not selling covered calls. I'm buying long dated leaps. I'm not buying short calls. But now it's more of like a hold. Like, I'm going to hold my shares. I think that their investment in growth is going to pay off. I'm probably going to cut a lot of my leaps. I'm definitely not going to, write any short-term calls, and I'm probably going to write covered calls. And if they get called away at some volatile period, then so be it. So I think that's what I'm trying to articulate here is it's having to consistently slide down on that scale to be something that, if I thought absolutely this is a steal of a deal, easiest money in the market, it's completely undervalued. Right now, I would say it's more accurately valued relative to the risk that they have and the prospects that the business has from a growth perspective.
Yeah, I totally agree. I also tweeted that I'm not looking to buy, not looking to sell, right? Sort of a hold. So
I'm glad you agree with me. Otherwise, I would get killed again.
You would get No, it's actually, I think it should be $100. Manuel is a bear.
Yeah.
Where do we see stock price in 5 years? Maybe let's answer this, and then we can and continue with our lives, because I'm starving.
5 years? I don't want to give a stock price because all that,
like
we have
3,000 per share.
I was thinking more 5,000. Really? 3,000? That's it?
Okay. Thank you for that amazing prediction. We're like, oh, it's a hold. It's kind of a shitty quarter. 3,000.
Not good enough returns. I mean, I do 100 per month, 100% per month. So
I think for me, I think a $50 billion company in 5 years. So what is that right now? Like $175 a share? If they don't,
$175.
but also like you can't. There's dilution. Like it's hard to measure.
175 in 5 years.
What is there right now? They're at a 14 billion.
Bro, that's like 5 months.
Shut up.
What a bear, man! And you call me bear.
I mean, I don't know, man. I could see 150 in 2026 at some point.
All right, so 193 is my exact. I'll give you that. My exact price 193.
What's the EBITDA guidance? It's
1.2 billion.
Yeah, 1.2 or 1.3. And it was like 6 billion or 6.5 in revenue.
6.5 rev, which they're going to beat in my opinion. But
yeah. I mean, let's say they beat and get to 1.4 in EBITDA. You put it like, what multiple would you guys put? I don't want to be the first one.
Just do the multiple that it is now.
No, because it's going to be growing a lot slower. You can't do that.
Yeah, I mean, because now they have a lot of potential for operating leverage. And I think that the guidance implies already a 20% margin or something like that.
Yeah, I think 20% EBITDA.
But I mean, let's say a 30 multiple. I'm being actually overly optimistic in my opinion, but I don't want to harm anyone.
You're overcorrecting your previous.
So that's a $40 billion company.
That's a $42 billion company. Yeah, I mean 42.
So that's like 165 a share.
So it's kind of in line with what you.
Yeah.
Okay, and then sure, whatever. We'll do year-end price target, and then we will wrap up. Year-end price target.
I have no idea because it will all depend on how the Novo Nordisk situation like develops.
I think
they said that they really are going to pursue the litigation. At least that when they lowered guidance, they said we're going to go after compounders. I mean, that doesn't mean HIMSS 100%, so it's kind of uncertain. But I think that, I mean, we're already at August, so until the year end, it's just a few months. So just a headline about it could send it down or could send it up, depending on the headline. If it's like a small settlement, it's okay, and it really takes off much of the risk. But if it's a huge lawsuit, then it will probably crash a lot. So I think in the short term, and that's why, I mean, people blame me, but that's why I got out. I think in the short term, the price will be much related to that situation and those news, and that's what made me feel a bit uncomfortable, coupled with some other factors. But yeah, I mean, it's way more reasonable to do 2030 forecasts, which is kind of weird in this scenario because it's always easier to do shorter term in terms of revenue and all that. But I think it's too uncertain.
I think for me, I still go with $75 because I think the market's forward looking and they're gonna guide for accelerated revenue in Q4, and I think the market's gonna like it. And I think by then there will still be no Nova news, and they'll kind of be old news. Like I think the lawsuit's not gonna happen, and so I think by end of year it'll be like, all right, you know what, we waited 5 months for nothing. We're gonna not price it in anymore. And then they're also gonna be guiding for accelerated growth, and so I think it'll have a good year end after Q3 results, which is November.
And a lot has to also do with macro, right? Like if the market as a whole is
exactly,
and people are going more risk on, then obviously that's going to drag up HIMSS as well.
Yeah, exactly.
Yeah,
we'll see.
If Trump comes in with 60% tariffs,
rates are going to
be on the market. So I'm bullish on HIMSS, to be honest. And unless some headline appears related to this, I think HIMSS could, I mean, at least close the year at like not too far from all-time highs, at least.
Yeah, I think that's fair.
I like that.
But it will all depend on what do we know.
Cool.
Okay. Perfect. Thank you, everybody, so much for watching. Let us know what you're doing with your shares, if you're buying or selling. Let's see where the poll ended up. I mean, it received 1,600 votes. 48% of people said it lands at $50, and 22% of people said under $50, and 23% of people who definitely voted before the actual results said it goes to $75. So
Or maybe they voted after and were just trolling.
Yes, exactly. Consider trimming into something less risky like Palantir. Thank you so much for that brilliant piece of analysis. And with that, we will end the stream. Thank you, everybody, so much for watching, and we'll see you in the next one.
Thanks, everyone.